back that massive severance package now. Today, McDonald's came out swinging in response to a motion from Easterbrook to dismiss, calling the former CEO, quote, morally bankrupt, and adding, quote, Easterbrook's suggestion that his lies notwithstanding, McDonald's got a good enough deal by ridding itself of him has no legal merit. The stock had a nice rally under Easterbrook, up about 90% since he took over. Investors rewarded the company following his push to modernize and digitize the store. So, what happens next? Will this set a precedent for other companies to sue ousted CEOs? With me now, our own Kate Rogers and NBC News and MSNBC legal analyst Danny Savalos to talk more about this. Kate, I'll start with you. What's the latest from Easterbrook, and how is he framing his case against McDonald's here?
So Easterbrook obviously is filing this motion to dismiss. He basically says that he didn't cover up his own evidence well enough and that McDonald's investigators should have discovered it when they did their audit, when they were looking into the relationship that was uncovered that kind of led to his firing. But as you mentioned, Kelly, the language here today, so strong. You rarely see a big corporation, particularly McDonald's, come out swinging like this, morally bankrupt. A lot of the terminology that they're using, very, very strong words here, and saying absolutely not. We do have a case here. He violated our company policy, values, and they're looking to get some of that severance back.
Wow, Danny, let me bring you in on that point. Do you think McDonald's will get its severance back? And is there precedent for a corporate case like this?
There's not a lot of precedent for a case like this, but Easterbrook's defense is essentially that, okay, even if I lied to you about those relationships, McDonald's should have conducted a better investigation of my email account. These allegations, by McDonald's own admission, are astonishing. And I'm reading them directly from the pleadings. And they're saying essentially that, look, when we first conducted our investigation, he handed over his phone. We looked at his phone, and everything that's on the phone, we gave it back to him because we didn't find anything out about these three other people. So anybody who has worked at a company, has a phone, and an email account knows that there's a server that those emails go through, and that server belongs to McDonald's. So essentially, Easterbrook's defense is, you should have known, you shouldn't have listened to me. You should have looked at the server and found out this stuff on your own. Shame on you. I should keep my money.
Do you think that's going to have standing, Danny, and allow him to avoid having to return this compensation?
I think his biggest concern is whether or not, if in fact he did lie to deceive investigators, that may override the fact that they absolutely should have been checking the server. Who in their right mind would rely on just what's on the phone itself, especially if, as is alleged, some of these, I guess, these sexual photographs were being sent to the McDonald's email account. On both sides, there appears to be, by the allegations, some galactic misunderstandings of how modern technology works on both sides.
And what, Kate, is McDonald's doing about all of this now?
So David Fairhurst was their chief people officer, head of HR. He was ousted right after Easterbrook was last fall. They now have a new HR chief people officer, Heidi Capozzi. She came over from Boeing, and she's really, according to the company, kind of taking a top-down approach with what's going on there, their hiring practices, and also kind of looking at how they evaluate employee complaints. When Chris Kempczinski, the new CEO, took over, there was a lot of emphasis on company values, what McDonald's stands for and what they're looking for as a culture moving forward. One of those things is kind of speaking up when you're seeing something that doesn't align with the company values, and they continue to hammer that home. So you can see that the company certainly wants to pivot. They've got someone new in HR, but the Wall Street Journal reporting that they are looking into David Fairhurst, his tenure as chief HR officer there, and what he did, and potentially him making women feel uncomfortable, reportedly, according to the Journal, at certain company events and gatherings, and how those were reported and evaluated.
Danny, quick final question. The only kind of previous example of this we could find was if you look back to Disney, what happened with Michael Ovitz. He got $140 million in shareholders sued after he left after, I think it was about a year and a half. But I don't think they succeeded in getting that money back. So if McDonald's succeeds here, does that set a big precedent for other companies to claw back compensation? Or do you think this uniquely hangs on this issue over whether they did a thorough enough job in ousting him?
No, not necessarily. This may not be precedent because it's so much governed by the language of the contracts that they entered into. And in this case, McDonald's is alleging that Easterbrook released them from liability, but they're not released from going after Easterbrook. Easterbrook likely denies that. But the point is, in cases like this, it's hard to say there are any cases that are precedential because these severance agreements are so controlling as to between the parties. And McDonald's made a deliberate choice here. They could have tried to fire him for cause, but they didn't want the trouble of the litigation, so they negotiated this settlement. The real question is whether or not, under the terms of this agreement, who, if anyone, breached.
Fascinating. Thank you both for helping to kind of break this story down for us. Our own Kate Rogers and Danny Savalos, appreciate it very much. Still ahead, can the post office deliver on its promise to send ballots on time? CNBC investigates. A look at what was uncovered straight ahead. Plus, products you can't get your hands on, including this company who makes something much needed for work and study from home. The stock up 90% in 6 months. It's the first name in our Out of Stock series. We'll talk to the CEO ahead.
Land Rover, above and beyond.
My reputation was trashed online. I felt completely helpless. My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100, you can own a piece of the next great business. It's your turn to become a shark. Join me at startengine.com.
At Southern New Hampshire University, we're committed to making college more accessible by making it more affordable. That's why we're keeping our tuition the same through the year 2021.
I knew SNHU was the place for me when I saw how affordable it was. I ran to my husband with my computer and I said, look, we can do this.
Take advantage of some of the lowest online tuition rates in the nation. Find your degree at snhu.edu.
Welcome back to the exchange. Here's your markets right now. The S&P just turned back into positive territory. It's up about half a point right now. But again, the story is not today. The story is how we're closing out August, a monster month for these averages. Best August for the S&P, I think, since at least 1986. Now, that's just because it tends to be seasonally weak, so this is a standout. Of course, in the year of the pandemic, nothing behaves the way that it quote-unquote should. Dow's down 215 points right now. NASDAQ, mirror image of that, up 100 points. So the Dow sitting in the red today despite a major shakeup of its components. The Apple stock split, Tesla happening today as well. Quick check on the sectors behind me. I'll come back to the Tesla story, but technology is back in the leadership. Not surprisingly, you could have guessed this based on what the major averages were doing. Energy, industrials, financials, those are back in the bottom three positions. So let's talk about that Tesla stock split. It's higher today. The shares are, of course. That's the only direction they go, right? They begin trading after their 4-for-1 split today. So $487 is the price there, and Tesla is up another 10% today. The stock has skyrocketed more than 70% since announcing that stock split a few weeks back. Shares of Beyond Meat are also higher on an upgrade to neutral from sell at Citigroup. They're pointing out that the stock's underperformance since July and better than expected sales growth should be a tailwind. Beyond shares up 4%. They're at 136. And Amazon hitting another record high, more than 2% gain today after it said it has FAA approval to fly its Prime delivery drones. So look up in the skies. Amazon is up 2.5% to get this $3,483 a share. Let's get over to Sue Herrera now for our CNBC News update. Sue?
Good to see you, Kelly. Here's what's happening at this hour, everyone. A setback for Michael Flynn. An appeals court on Monday denied a bid by former National Security Advisor Michael Flynn to immediately end the criminal case against him. The D.C. Court of Appeals denied Flynn's request for an emergency order directing the judge hearing the case to grant the DOJ's request for dismissal. The World Health Organization said on Monday that authorization of COVID-19 vaccines requires a great deal of seriousness and reflection for individual countries. The WHO Director General emphasized the need for countries to get the virus under control before reopening their economies.
The more control countries have over the virus, the more they can open up. Opening up without having control is a recipe for disaster. It's not one size fits all. It's not all or nothing.
And Japanese venture company SkyDrive has unveiled that beauty. It's an experimental flying car that can carry one person. The vehicle is operated autonomously. It can fly at up to 60 miles per hour, and the car can take off and land on an area the size of 2 parking spaces. And in the big cities in Japan, there's not a lot of room, so that's one of the reasons they've been pioneering that car. I will not be one of the first to get in it, however,
No,
Kel.
I'm never getting in it, but we've got Amazon delivery drones, we've got Japanese flying cars.
Yep, technology.
Yeah, I was saying, I don't know, exciting, terrifying, a little bit of both. Sue, thank you very much.
You got it.
Sue Herrera. As the coronavirus does continue to spread globally, more Americans are working, learning, and shopping from home than ever before. Now, many are considering the choice of voting remotely. How reliable is the Postal Service in that effort? NBC television stations decided to put it to the test. Here's Kayla Tausche.
As Americans consider who will get their vote, millions are weighing how to cast their ballot and whether they can trust the messenger. So this month, 12 NBC-owned stations and NBC LX conducted an experiment, sending 155 first-class letters across a dozen major metropolitan markets. 88% of the letters arrived within 3 business days, the U.S. Postal Service's advertised time frame. Another 10% arrived within a week. Just 2 letters, 1.3%, are still missing. All the letters were addressed to individuals at home. They were mailed from multiple locations, some sent within the same city, some sent to people in other cities. The postal regulator said in the June quarter, 92.4% of all first-class letters nationwide arrived within 2 days, a faster rate than NBC's study in August. These letters carry standard postage.
Welcome, everybody.
Postmaster General Louis DeJoy, under fire for eliminating resources ahead of the election, has promised ballots would be marked priority.
The Postal Service is fully capable and committed to delivering the nation's ballots securely and on time.
Union leaders say without overtime, without high-speed sorters, and without some 40,000 employees who have quarantined, manpower is limited.
If the mail is there to be worked and you just arbitrarily reduce hours, then guess what? The mail doesn't get worked.
A report from the USPS Inspector General found major issues in Wisconsin, where voting by mail spiked 440% during its April primary. The IG said tubs of absentee ballots were misplaced, returned, or lacked postmarks. Watchdogs say it's a cautionary tale.
Not only was this a problem in places like Milwaukee, but it's a harbinger for potential nationwide issues in the delivery of ballots as the demand for mail-in voting increases because of the COVID-19 crisis.
Nationwide, some 190 million Americans are eligible to vote by mail this fall. A spokesperson for the U.S. Postal Service referred us to public comments from DeJoy and the organization and added, quote, the Postal Service has more than enough capacity, including collection boxes and processing equipment, to handle all election mail this year, which is predicted to amount to less than 2% of total mail volume from mid-September to Election Day. NBC stations plan to test the timeliness of the mail again in September and October ahead of the November 3rd election. Kelly?
Kayla, were there any trends in the places where the mail took the longest?
Well, in the roughly 10% of letters that took about a week to arrive, perhaps unsurprisingly, most of those were long haul. They were sent to other cities, but there were still about 6 letters mailed within the same city that took about a week to arrive. So what experts say is if you don't know how long your ballot is going to take to arrive, either drop it off at your polling place in person or give it about a week to do so.
Yeah, at least. Kayla, appreciate it very much. Kayla Tausche there. 100-year-old snacks back, unpinning a multi-million-dollar lease, and United changes course on fees. All that and more coming up in today's Rapid Fire. The Exchange will be back with all of that right after this.
This was an unexpected bill not covered by my health insurance. And this is the Aflac duck who helped me cover it.
Aflac! These are all the cab rides to my physical therapy. And Aflac paid me directly to help. Aflac! What he said.
And this unexpected bill is from the $2,000 specialist. Thanks.
Aflac!
When you're sick or injured, Aflac is there. We can help with expenses health insurance doesn't cover. Get to know us at aflac.com.
At Credible.com, we've helped tens of thousands of people save money by refinancing their student loans. In 3 minutes, we'll get you actual rates from multiple lenders. We could save you hundreds of dollars a month.
Visit Credible.com to see how much you could save.
Nutritious prepared meals made by chefs and ready in 3 minutes. We don't have to cook anymore.
We don't have to cook anymore? Go to Freshly.com today.
This is a keepsake frame. This is actually a photo from my wedding. I'm Adam Weiss, founder and CEO of Keepsake. If you're anything like me, you've probably got 7,000 photos on your phone. And sometimes the moments that really matter most end up getting lost. That's why I made Keepsake, the mobile app that makes it easy to have your photos printed, framed, and shipped to your doorstep. So if you've got a special photo on your phone, install the free Keepsake app. We would love a chance to frame it for you.
Booyah! Welcome to Cray America. You can see more of me on Peacock, the new streaming service from NBC Universal. Go to News on Peacock to stream Mad Money clips and tips for free. That's a no-brainer. Learn more at peacocktv.com.
Welcome back. It's that time. Let's catch you up on a few stories that should be on your radar today. It's Rapid Fire, and here to break down the headlines are Dominic Chu, Leslie Picker, and Robert Frank. Welcome, everybody. First up, my personal favorite story of the day. After nearly a century as a private, family-owned company, the snack maker Utz. We've all seen the potato chips, the pretzels. They're iconic. They're making a public debut through a SPAC. They just completed a merger with Collier Creek Holdings on Friday, began trading today under the ticker UTZ. How's it going? It's up about 8%. The CEO, is it Diane Lissette, was on Squawk Box this morning, said going public this way allows them to
with
clean
the
up the balance
influx of the
sheet.
capital from combination from this SPAC going public, we're really going to clean up our balance sheet to a really great position. And as we go forward, I mean, we think we have a ton of organic opportunity just to grow geographically or into some of the subcategories that we're not as robust in, that we should be more robust in.
And their sales, Leslie, were up 11% during the pandemic. They benefited from some of that sort of stockpiling trend. Why the SPAC route? I mean, this is they're a long-established company. This isn't a speculative EV company.
Exactly. That's exactly the point here. And I, for one, am certainly victim to the whole stocking up on potato chips and other things to get me through this pandemic. However, what's interesting here is that these discussions actually started last July, before the pandemic was even in most people's mindset. So it's one of those kind of counterpoints to all of the people who say going public via SPAC is a quick process, not always. But for them, it makes a lot of sense, especially if you're a family-owned business, you're storied, you've been at it for a long time. It sounds like their real incentive here is to clean up their balance sheet. This gives them a really easy access to the capital markets to do that.
Dom, I still feel like I'm missing something. I guess my point is this is a company that has revenues, it has earnings, it has a history. I mean, the current CEO is, I think, the founder's grandson's son-in-law. Like, they have a great story, a well-known product. Why isn't a SPAC more expensive? I mean, why not just even do a direct listing?
Well, I'm not sure if it's more expensive or not. I mean, every structure is going to be slightly different, and the underwriting fees that go along with it. But the traditional route to an IPO has always been costly. It's always been more complicated. It's always exposed the companies and its underwriters and all the clients involved to a lot more scrutiny on both sides of the equation. So if you're taking a look at the SPAC route, this is just emblematic of the paradigm change, right? If a lot of companies can, here's what I would say. If you're a SPAC, right, and you have a star manager who's raised a good amount of money on their own, they've basically taken the place of an underwriter. So they are, in essence, the underwriter of this whole process. You don't need the banks to go out and do it. So in many ways, this could be a cost issue, but it could just be a way of saying, you know what, if we've got a good manager, we believe in the product, we give them the blank check, they will go out and make the right decisions. And in this case here, Utz is probably one where they say, hey, if not now, when? Market's at record highs, consumer products are huge.
Right, we've had a great quarter. So, Robert, should we be thinking about the SPACs almost like Shark Tank? You know, and this is Kevin O'Leary. Like, they're saying, you know, we have the chance to partner with Collier, and they're going to kind of lend some of their investing expert. I mean, is that a little bit of the dynamic here as well?
Yeah, definitely. But what's interesting about this is the family is holding on to more than 50% of their holding. They are cashing out 10%. But this is a family that's fourth generation, as you said. They've held this company for over 100 years. And the fact that they're staying in with so much equity is a good sign. They need cash to continue buying these smaller brands, get scale, and maybe one day get sold to whether it's Pepsi or Warren Buffett or somebody. So this gives them the cash to do that, but it's still going to be a family-controlled business. And that, I think, is a very good sign for investors.
Yeah, fair enough. And again, it just makes me feel like a kid again when I see all those Utz brands and
cheese balls.
Yeah, the cheese balls. That's right.
Potato sticks.
Yeah. See, they should have done a road show. Anyway, let's move on. Another sign we could be witnessing the end of office buildings as we know them. Pinterest paid nearly $90 million to scrap its lease on a nearly 500,000 square foot to-be-built office in San Francisco. Just the latest indicator of the staying power, guys, of remote working. Facebook, Twitter, and Apple, among a host of tech firms, all embracing the trend. Silicon Valley could look very different in the years to come. Dom, I'm going to you because I know California is near and dear to your heart, but also because, look, as the Stanford study just pointed out, 42% of the country is working from home right now. Pinterest move suggests these changes are going to be lasting for quite a bit longer.
I mean, it won't be Silicon Valley. It won't be any valley. It won't be, I mean, this whole theme is about remote working. It's about being able to do a job in technology specifically that doesn't require you to be in an office. And we've been talking so long about this notion that the COVID pandemic accelerates trends. Well, one of those trends has been you don't necessarily have to be you don't have to be in Palo Alto or Mountain View or even New York City. The idea here, if you can actually get folks who want to live in Memphis, Tennessee, or Lexington, Kentucky, or Charlotte, North Carolina, and pay them a good amount of money to live in those locations with lower costs of living, this could be huge in attracting new talent. And for Pinterest, it might be a small price to pay to break some of these leases if they know they can get the best people and working from areas that are not necessarily Silicon Valley.
Picker, what would you add to that?
Well, I think you have to wonder, you know, if you do start to see this kind of tech diaspora across the country and you're paying these people pretty high wages, what does that do to the cost of living? Does it increase it? I don't know. I mean, it's a big country, maybe not, but I think it's something that, you know, would be interesting to look into whether or not we do see this impact of staying from home if it does have staying power.
It's a great point. Look, we've seen this before. I mean, in Seattle in the 90s, people were already mad at Californians for coming in and bidding. You know, they're saying real estate here is crazy expensive. I mean, can you imagine how they feel about 2020? Just wait till these towns have the influx of San Francisco workers who are ready to put their salaries to work. That's an interesting point. All right, let's talk about the Mets, shall we? Sources are telling our own David Faber today, drum roll please, that billionaire hedge fund manager Steve Cohen is in exclusive talks to buy the New York Mets, and the two sides are expected to reach a deal in the next few days. The new deal is expected to be at least $2.6 billion, Robert, which is interesting because that's the same price he offered to pay for the team late last year in a deal that didn't pan out. He reportedly beat out other bidders, including power couple do we call him J-Rod, Alex Rodriguez and Jennifer Lopez. The Mets are expected to lose upwards of $100 million billion this year. And Cohen will easily be the richest owner of an MLB team, Robert.
Yeah, and that's the important point. It's going to be hard to overstate how rich and how important he's going to be to this league. You know, he is richer than the first three current richest MLB owners combined right now. He's worth something close between $14 and $15 billion. And yes, he's going to have to fund some losses in the first year, maybe $100, $200 million. But, you know, this is a guy who spends $155 million on a Picasso, $165 million on a Lichtenstein painting. So, you know, this is like his monthly art budget just to fund this entire team for a year. So this is really going to change the Mets. It's going to change the entire sort of scale of wealth in the league. And I think it's going to improve the Mets and probably force a lot of other owners like the Yankees to start paying up as well.
So no COVID penalty, Dom.
No COVID penalty here, but what's curious about, I mean, just listening to Robert talk about what it's going to be like for Cohen to be an owner in the Major League Baseball kind of arena, I think to myself, David Tepper, right? He owns the Carolina Panthers, made a lot of waves, a big splash when he did so, but he owns the team outright. For a guy like perhaps Steve Cohen, to own a team like that and have a real hand in operations is probably going to be one of the things that makes him feel like this is worth the money, even if the losses are there. Because you have a franchise, it is yours, and you can make this thing. If you're a fan since you were a kid, you can make this into a great, great team. This could be one of those legacy items beyond what you were just thinking about with regard to your hedge fund career. So I think this is great. I just feel like we've been here before. Cohen's been kind of around the Mets for so long now that I just hope something kind of happens one way or the other.
Yeah, and if he doesn't make them into a great team, then what? I mean, then, you know, we just assume, right, that it's got to pan out, but it's still going to be a lot of work. But you know, throw enough money at it. All right, finally, United Airlines is announcing it'll no longer charge a $200 fee to change domestic flights. They say the move is permanent and part of a push to serve customers better as they navigate the COVID pandemic. Airlines seemingly desperate to get anyone to fly these days. The TSA said airport traffic is hovering around 30% of last year's levels. United shares are lower on this news, down about 3% and still down about 60% on the year. I don't know, silver lining, Leslie, of the pandemic?
I just think it's funny that they're trying to get more people to fly by saying you can cancel your ticket for free. It seems kind of counterintuitive to what you would expect these airlines to do. Southwest has been doing it for years. It certainly accords people more flexibility when they're booking to say, okay, well, I don't really know what the situation is, so I'll book it now, see what happens later. I don't know. I feel like airlines could use the additional revenue, but I, for one, am not personally a fan of those change fees.
Yeah, who is? Everybody hates them. And the fact, Dom, that Southwest did away with them tells you that, you know, because they're trying to be customer focused. Even Southwest shares, by the way, down about 2.5% today.
Remember, Southwest is a budget airline, right? So you're talking about a full service carrier. And by the way, those change fee nixes only happen with full fare economy or more expensive tickets, not necessarily those ones that are kind of like the bargain basement ones that American United would put out there. So this is not exactly a huge game changer. Not that many seats are priced at those levels anyway, Kel. So I'm kind of curious to see how this all pans out.
Robert, put a final word on it.
Yeah, it's about time. I mean, Southwest did it, and like most retailers, they provide easy refunds, easy exchanges. It's time for airlines to do the same thing.
That model wins. I totally agree. Thank you all today. Dominic Chu, Leslie Picker, Robert Frank. We really appreciate it for Rapid Fire. Coming up, while school may be back in session virtually, a new study finds most college students are back on campus physically, and that has college towns torn. We'll dig into it next.
So, what's your plan for retirement? See the world? See the grandkids? Keep doing what you love? However you plan to retire, you need to be prepared. Do you have a financial plan? Do you have a tax strategy? How much of your portfolio can you afford to withdraw? Learn more about these and 96 other retirement topics coming your way in this free guide from Fisher Investments.
Call now for Fisher's 99 retirement tips. Our free guide shows you helpful ways to make your retirement more enjoyable. It's sound advice for a more secure future. Call 1-800-881-4545.
You've worked years for a comfortable retirement. If your portfolio is over $500,000 and you want to make your retirement last, call now.
Get your free copy of 99 retirement tips today. Call 1-800-881-4545.
Don't just retire. Retire well.
Guys, if you wake up feeling fat, bad back, heartburn, tired, then it's time to get healthy and lose weight with Nutrisystem for Men.
I'm healthier, I'm stronger.
Lose up to 13 pounds and 7 inches overall in your first month. Money back guaranteed. Order now and we'll deliver Nutrisystem for Men.
Not only did I lose 60 pounds, I don't snore.
Save 50% on a month of meals delivered to your door.
Go online or call 888-916-FIT6 to save 50% plus get probiotic shakes free.
Well, things are different these days, but we're figuring it out. We're doing school online now, learning a lot. Come in. Finding cool stuff to watch. Dad's got some new workout buddies. And I still get to spend time with you.
Welcome back. After suspending classes for 2 weeks due to a COVID outbreak, Notre Dame announced students will be returning to campus on Wednesday. And a new study shows they won't be the only ones, as many students will learn virtually, but not necessarily at home. Steve Leisman is here now to explain. Steve?
Yeah, back to school, Kelly. A new study with implications for the nation's health and its economy finding that more than 3/4 of college students are back on campus. The study by Burbio, which is an online aggregator of community and school calendars, found 78% of the 4-year residential colleges have summoned students back to campus. Julie Roach, Burbio co-founder, said in a release, quote, despite challenges to managing health services and the logistics of everything from moving in to dining, colleges have made a clear commitment to getting students back on campus. The percentage is far larger than many would have thought because it includes the many schools that have called students back, but are teaching both virtually and in person or some combination thereof. This is a positive for college towns economically. They're desperate for the commerce, but residents are also scared of the potential COVID transmission. It also raises the potential for students to bring the virus back home. A New York Times survey last week finding 26,000 cases and 64 deaths on colleges and universities around the country. That includes headline-grabbing outbreaks like almost 1,000 cases at the University of Alabama at Birmingham and 835 at UNC Chapel Hill. The Burbio study finding that in 27 of the 51 states plus the District of Columbia, 100% of schools have called students back to campus. The percentage is weighed down mostly by the decision at many schools in California to keep students home. For better or worse, the study also finds 60% of schools will send their students home from Thanksgiving until January, Kelly.
I mean, Steve, it does seem weird to say, okay, we're going to call you back, but you don't have to really come to class. It's going to be virtual. I mean, it just seems like a recipe for partying and for problems. And it may not even be the wrong call. It just seems odd. Everything about it. And then having sports still go on. I mean, so it all seems very odd.
And sports not go on and be charged the athletic fee.
Right.
Kelly, it is a wrenching story to report here. I read numerous letters of kids from school that are complaining about everything from the tuition costs to being feeling like they're in prison. I don't know if it's any consolation or worth reporting, but my son decided to defer this semester.
Oh, absolutely.
He was not going back to college. And he had my full blessing to do that if that's what he wanted to do. Either way he wanted to do it. But the stories about the virtual learning are not good, and the stories about the other side of it, about being in class, are not good either.
Yeah. Steve, thank you, sir. We appreciate it. Steve Leisman with the latest. Still ahead, shares of Logitech climbing more than 56% this year and 130% from their 52-week low. The stock is hot, but one of its products is in such high demand that consumers can't get them. We'll talk to the CEO about it next.
This is Decision Tech. Find a stock based on your interests or what's trending. Get real-time insights and your customized view of the market. It's smarter trading technology for smarter trading decisions. Fidelity.
What if you could have the perspective to see more? At Morgan Stanley, a global collective of thought leaders offers investors a broader view. We see companies protecting the bottom line by putting people first. We see a bright future, still hungry for the ingenuity of those ready for the next challenge. Today, we're translating decades of experience into strategies for the road ahead. We are Morgan Stanley.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
Where the nation is on the move, Main Street's new view of the market.
It is an IPO palooza.
Where COVID hotspots are improving on the path forward. Stay connected, stay informed. Watch or listen live on the CNBC app.
Have you wanted to speak a new language, but thought it would be too difficult? Then try Babbel. Babbel starts by teaching you words and phrases that gradually get more complex. Soon, you're practicing short conversations. So in 15 minutes a day, you'll be speaking a new language in a few weeks. Babbel works because it's built around real life. It teaches you everyday practical conversations that you will actually use. Babbel, language for life. Try it free at babbel.com.
You see ads for car insurance all the time, but how do you know which one is actually the best deal? That's why we created Gabby. Gabby is a free tool that's saving customers over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
I love this photo of my nephew, but getting it from here to here can be a real pain. That's why I started Keepsake, the free app that makes it easy and affordable to have your favorite photos framed. So if you've got a special photo on your phone, download the free Keepsake app and start framing today.
Welcome back. As people adjust to COVID-19, consumers are seeing very specific products go out of stock. This week, we're taking a closer look at what happens when Econ 101 collides with a pandemic. And we're kicking things off with webcams. How crazy is demand? Logitech, a leading manufacturer of computer accessories, saw a 116% surge in webcam sales last quarter, and it doesn't see demand slowing down anytime soon. The shares are up 4% today, 94% in the past 6 months. And joining me now is Logitech CEO and President Bracken Darrell. Bracken, it's good to have you. Welcome.
Great to be here. Thanks, Kelly.
I assume you're using one of your products right now?
Of course I am. Actually, I'm using multiple products right now, not just the webcams, but a microphone and a mouse and a keyboard.
That's true, and you guys make the whole suite. So tell me what's still in stock. What is there no way people are going to get their hands on for quite some time?
You know, a few weeks ago or months ago, I would have said, you know, there's no way you're going to get your hands on a lot of things. But now we're really coming back into stock and everything. We still, you know, we're kind of hand to mouth on webcams still, but we're getting there. And we're a little tight this quarter, but I think if you want one now, you can find one. We're still very tight on blue microphones, which these are super. If you, I don't know if you've ever seen them.
Yeah, show us. Yep, absolutely.
Yeah, this is it, and they're really, really great. So we're still very tight on blue microphones, but that's coming back too. So overall, I think we're going to be in pretty good shape over the next few weeks and a month or so in everything.
Tell me real quickly about your supply chain. Where is the stuff coming from, and where are you running into bottlenecks? We know that UPS, FedEx are doing holiday surcharges. You know, what's it like right now, and you know, what countries or production areas of the world are an issue?
Well, we make almost everything we sell in Asia, either in China or in the countries around China. And the bottlenecks have really been, for the most part, the most difficult supply problems have been in component supply. But we have great, very long-term relationships with most of the key component suppliers. We've been able to get to them, and we've been able to unlock most of that demand. We have increased our own capacity for making these things dramatically across the board. So it's been exciting.
Are you pushing up prices, and what happens when you watch this kind of gray market come up online where, you know, those suppliers know how to get stuff out there at a really high markup when people need this stuff fast? How do you deal with that?
We are not raising our list prices. We just really, especially in the beginning of the pandemic, when people needed our products to communicate with their loved ones or to teach or to learn, we just weren't going to increase prices, and we're not going to increase prices. We really held firm. It did happen where you could find webcams at a crazy prices online, and there's not much we can do about it. We certainly reported it to the retailers, detailers who had that happening, but there's not much we can do about it.
Yeah. What is the biggest mistake people make when buying or using one of a webcam in general?
You know, the biggest mistake people make is not using a separate webcam because, I know I sound like I'm promoting, but there are great embedded webcams, but separated webcams give a lot of advantages, including the fact that they tend to be higher quality. You also can move them around. I can pick this up and I can show someone, I can show you right now. Instead of doing what I did, I can show you my microphone. I could also put it over if I was drawing something. I can put it over and show it. So using a separate webcam is really an advantage. And I know that's frustrating for people who are trying to get one of ours and couldn't, but they're coming back into supply now.
Yeah, well, we appreciate the update, Bracken. Of course, wish you the best as this continues. And thanks so much for joining me today.
Thank you so much for having me, Kelly.
Bracken Darrell is the CEO and president of Logitech, kicking off our Out of Stock series this week. That does it for us here on The Exchange. And coming up on Power Lunch, Advanced Auto Parts CEO Thomas Greco will join, talk about the auto boom. I'll see you with Tyler Matheson after this quick break.
Thinking about a DIY home remodel? Before you pick up that hammer, make sure you know the risks. If your project isn't safe, compliant, and up to code, your homeowner's insurance may not protect you if something goes wrong. Building an addition, you'll likely need to update the dwelling and personal property coverage limits and more. Insurance should never be DIY. Trusted Choice independent insurance agents can help. By representing multiple companies, they can provide customized coverage based on your unique needs so you can make sure your home and handiwork are protected.
COVID-19 has launched the greatest behavioural change in our lifetime. We vaulted 5 years in the adoption of digital in just 8 weeks. Now we're speaking to leaders who are asking, how do we bottle the stuff that worked?
We can innovate the distribution and consumption experience of financial services.
We've created a brand new processing plant by just making incremental improvements. Our people did it with AI, will, and enthusiasm.
My reputation was trashed online. I felt completely helpless. My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
ServiceNow, the smarter way to workflow.
Good afternoon, everybody, and welcome to Power Lunch. I'm Tyler Matheson. The new Dow is here today, and right now it is down about 200 points as Salesforce, Amgen, and Honeywell are officially added to the mix. Meanwhile, the S&P and NASDAQ setting new records. The S&P higher earlier, now basically flat, but just inching into the green. And that's as the party just won't stop for stocks like Apple and Tesla. Their stock splits going into effect today. And you can see both of those names trading higher, and not just by a little bit. And Advanced Auto Parts has more than doubled since the March low as stimulus checks put money in the pockets of consumers. But what happens now that the relief has seemingly stopped? The CEO will be here to tell us what he is seeing on the ground right now as Power Lunch begins for a Monday. Kelly.
Thank you, Ty. The new Dow taking a breather today, but still on pace for its best August in 36 years. Let's go to Bob Pisani for more. Bob?
Kelly, the important thing about today is we're continuing to see tech outperform, but that's because of Apple, big momentum name, and the semiconductors like NVIDIA, AMD, all doing well. Healthcare is doing well. Industrials, banks, energy, all the cyclical names, as you can see here, are lagging. What a summer rally we have had. 5 straight months. Traditionally, August is not a very great month. Not today, not this month. Take a look, 7% move in August, but April was a great month. May wasn't that bad. June was okay. July, 5 straight months to the upside. We'll see if that continues into September. This is a big day for the Dows. You've heard all throughout the day. New additions at Honeywell, Amgen, Salesforce, and out with Pfizer, Exxon, and Raytheon. What is the effect of this? The effect is the Dow's a little more growth-oriented because you now have Salesforce in it, and you have Amgen, a growthy biotech name, and it's a little more healthcare weighted because of the fact that Amgen had a higher price than Pfizer. So some important changes. I think the Apple split, I think it's meaningful. A lot of people over the weekend and the last few weeks have said, on a fundamental level, it's meaningless. And that's technically correct. But remember something, back in the 1990s when stock splits were all of the rage, the attitude was it was viewed as a vote of confidence back then. And it was sort of like a call from a broker about a hot tech IPO. People paid attention to stock splits, and they were associated with momentum stocks. Here it is with Apple. We see an awful lot of option activity around the Apple announcement. Some people are paying attention and think it does make a difference, even if on a fundamental level it is meaningless. One thing's for sure, folks, if Apple continues its momentum, it's going to be harder to have that impact on the Dow with 1/4 the size. Our our earnings editor, Robert Hum, says that Apple's gains have made up a third of the Dow's gains since June 23rd, about 1,000 of the 3,000-point gains that we've seen in the Dow. And that's going to be harder to happen now that that Apple's only 1/4 the size in the Dow Jones Industrial Average. Guys, back to you.
All right, Bob, pretty amazing stuff you're telling us there. Wall Street veteran Leon Cooperman telling CNBC that trading in certain stocks is a warning sign for the market. Listen in.
Look at Tesla and Apple. Everybody understands that splits don't create value. My dad once told me if he gave me 5 singles for a $5 bill, I'm no better off. Okay? And so we see Tesla up 54% since the day they announced the split. The S&P is up less than 4%. Apple's up 30% with the S&P up 6%. And everybody's talking about the split.
And in his latest note, Canaccord chief strategist Tony Dwyer says he is withdrawing his S&P 500 target because there is no precedent to how high valuations can go with low rates and essentially unlimited quantitative easing from the Fed. Our next guest called the March market bottom and says he has been saying to buy this rebound. So how much more room does this market have to run? Let's bring in Tom Lee. He is the co-founder of FundStrat Global Advisors. Tom, welcome. Congratulations on a good call earlier this year. Why don't we start where Cooperman led us, and that is to the split in Apple and in Tesla. Should you buy those stocks not because they split, but because they are just good stocks with great momentum?
Well, I mean, I agree. Stock splits don't change the fundamentals. And if we strictly value everything on fundamentals, markets are governed by that, maybe half the time. From a liquidity perspective, splits make a difference because, it allows people to buy more shares mentally. And, at the end of the day, look, I don't think it's a great sign that stock splits are causing stocks to rally. It doesn't, it's not the reason someone should be buying stocks, but I don't think I would make a broader conclusion that this market is only rife with speculation and it's expensive.
Let's talk a little bit about the stocks that you do like. I know you see the market moving up at least modestly from here, right? Through the end of the year. And you have stocks that you call epicenter stocks that are of particular interest to you right now at these levels. What is an epicenter stock? And give us some names of ones that bubble up through your research.
Epicenter stocks are stocks that were harmed because of the pandemic. So they either saw a huge disruption of business from loss of interest, or they were forced to close because of government mandate. And therefore, these are really the most sensitive to not only the business cycle, historically they would be, but now also the safe reopening of the economy. So whether it's a vaccine that would cause a binary change, or testing, prevalence, or even a cure, and just the consumer just sort of leaving their house again, those are all going to be positive tailwinds. Now, epicenter is really 4 sectors, discretionary, financials, industrials, energy, but it's about 26% of the market cap of the S&P. They haven't really participated in this move to new highs. Many of them are still 50% off their highs. And I think that's where the real opportunity is, especially if the economy reopens. And some names, yes, it'd be things like on the leisure side, gaming like Wynn, or theme parks like Disney and Six Flags, cruise lines like Carnival, Of course, some of the airlines, whether you want to do it through Delta or through Southwest.
Obviously, one day does not a month or a year make, but all of these stocks, or many of them, are down actually today. Are you beginning to see, as you look at the numbers that pertain to the coronavirus, are you beginning to see at least some of the signs that would lead you to believe that the economy is going to start to pick up and favor these stocks? In other words, case counts, hospitalizations, fatalities, and so forth. Are you starting to see a world where this country, at least, may be beginning to make a turn for the better, we hope?
Yeah. I mean, the pandemic is still, burning through the country, so it's very serious. And case numbers, while they've improved a lot from their peaks, they haven't improved, they've sort of stalled because of colleges reopening. But I think two things give us some comfort. One is the level of deaths is actually falling. So we are starting to see fewer people perish, which is a great sign. And, I think there's increasingly, some sense that the safety of corona is improving, because of treatment regimen. So even if someone is catching it, it's treatable. And I think that that's really important because, nobody wants to have to, no one wants to catch this, but no one wants to end up in a hospital. And I think that if we can improve the safety, certainly going to look a lot better in 6 months. But right now it's, the economy's in a depression.
A depression, you say, a depression, and obviously second quarter showed GDP numbers that were historic in their decline. Let me just make sure I'm understanding you, or to put a fine point on it, I don't mean to put words into your mouth. These epicenter stocks, which you say have not really participated in the rebound, though they're off their lows, they're not back to highs, are they the next FANGs? Are they the next market leaders? Or are you willing to go quite that far?
From a risk-reward perspective, if I had to put new money to work, I think the epicenter stocks are going to deliver a lot more percentage points over the next 6 months. Now, I don't think they're going to replace FANG because, as you know, FANG are superior blue chip companies with done really well during this crisis, but have seen their equity risk premium shrink, so they're re-rating higher. And I think that's a permanent shift. But epicenter is a chance to buy stuff that people had to sell because they don't want to touch it if there's a pandemic or depression. But as conditions improve, these are going to rebound sharply. And yes, there's really big upside.
Good risk reward. Tom Lee, always great to see you. Come back anytime. Thank you.
Yeah, thanks.
Kelly?
All right. Tyler, thank you very much. And Apple is not the only big name splitting today. Tesla, of course, splitting 5 for 1 and still trading at nearly $500 a share. The stock is up nearly 70% since Tesla announced the split just 3 weeks ago, and it's up nearly 10% more today. Phil LeBeau joins us now. Phil, this is a purely cosmetic change, right?
Yeah, fundamentally, nothing has changed. They haven't given new guidance. You haven't seen any analysts come out and say, look, this is something new fundamentally with the business. You mentioned when they announced the stock split back on August 11th. Take a look at shares since then. I mean, this is a stunning move here. It's up, what, about 71% since they announced the 5-for-1 stock split on August 11th. And it also raises the question, okay, if you do want to look at fundamentals, if you do want to look at something that you can hang your hat on and say, where's the next catalyst going to come from? You're going to have 3 opportunities over the next 4 or 5 weeks. Battery Day on September 22nd, where Elon Musk is expected to talk about the technology they're developing, what's happening with their battery costs, are they coming down, by how much? October 1st to the 3rd is when they announce Q3 deliveries, and then later in October and early November, somewhere in that time frame, you'll get their report of Q3 financials. Is it another profitable quarter? Speaking of battery costs, we've talked about this for some time. Cairn Energy Research Advisors, they have basically crunch the numbers when it comes to battery production. And they make it very clear that Tesla leads the competition when it comes to the costs of the battery packs that they put together. That is their advantage right now. How much does it continue? How long does it continue? Those are going to be questions coming up starting on September 22nd. Finally, take a look at Tesla versus General Motors. Just since August 11th, since Tesla announced the split, by the way, it's a little hard to tell there, but Tesla's shares, while they have exploded, GM has actually moved up. You can't really tell from that chart, but it has moved a little bit higher. Just goes to show you the split that you're seeing in terms of investors and their attitude about automakers.
Phil, there was also a fascinating read in the Journal over the weekend about the former Tesla executive who's now doing his own energy company, where they're looking to try to reuse a lot of these ingredients for making batteries that are in really short supply and you just can't make enough of them, including reusing them for mobile phones.
Yeah, and you're going to see more of this. I mean, as the EV market, and you see more automakers developing and making EVs, you're going to see more emphasis on battery technology, the reuse of batteries, and the components, as well as those raw materials that go into batteries. That's really a burgeoning market. You'll see more attention focused on that over the next 5-10 years.
Yeah, looking forward to it. Phil, appreciate it. Phil LeBeau with the latest on Tesla. Ty?
All right, Kelly, coming up, Canada making a deal to buy Novavax vaccine, while Vir Biotech and GlaxoSmithKline say they will begin phase 2 of their coronavirus treatment. We've got those details, plus TikTok on the clock to get a deal done before the app is banned in the U.S. But now, approval from China could stand in the way. More Power Lunch right after this break.
Here just realized they outgrew their home, so they used Rocket Mortgage to finance their next one. Need to know if your next home fits your budget and your family? Rocket can.
What did it take for me to beat lymphoma? It took an incorrect diagnosis, a failed stem cell transplant, and one call to MD Anderson Cancer Center to renew my hope. It took the brilliant minds of my oncologists and a groundbreaking clinical trial to defeat my cancer and trailblaze a path to help thousands more.
What will we do in the pursuit of making cancer history? Whatever it takes.
Journalism is not about emotion or persuasion or opinion. Journalism is about gathering accurate information and reporting facts. It takes hard reporting work and a commitment to getting it right. Journalism has never been more important. Getting through this time of crisis requires the truth. That's what we'll deliver every night.
The facts, the truth, the news with Shepard Smith premieres September 30th, CNBC.
This is Kate.
Hey.
She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance, but she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
Hi, I'm Yaya, founder of Truebill. These are crazy times, and keeping track of your money has never been more important. With Truebill, you can easily cancel subscriptions, lower bills, and create smart spending habits. Download Truebill today.
Welcome back. The TikTok saga could strike a deal to be bought by a U.S. company as soon as tomorrow. But now China could throw a wrench into the whole thing. China is adding artificial intelligence to its list of export controls, meaning ByteDance, the parent of TikTok, would need Chinese government approval to sell its U.S. operations. Shares of the potential buyers, Microsoft, Walmart, and Oracle, all trading off today. For more on the TikTok of TikTok, let's bring in Alex Sherman. He's technology reporter for CNBC.com. Alex, what is in China's ability to do now to prevent a deal if that's what they're trying to do?
So what we learned late Friday was that China is going to require a license in order for ByteDance to in fact sell off the U.S. assets to TikTok. In other words, China would get a say in whoever ByteDance sold the U.S. TikTok assets to. What we know right now is that TikTok continues to try to get a deal done. We don't know the buyer yet, but I was told that there is a preferred buyer. So the two buyers here are Oracle, or a combo bid from Microsoft and Walmart. Initially, a deal was on track to be announced as soon as today, but the Chinese news that China will in essence have a say in whether or not ByteDance can in fact move forward with this deal has at least put the brakes on a deal to be announced today. However, as you mentioned, a deal could be announced as soon as tomorrow, which leads me to believe that the wheels are still moving here as TikTok and the buyers try to get even more information about what exactly China's interested in.
Although, Alex, I mean, on some level, you would expect if the U.S. is going to come out and say, no, we are going to take control of U.S. TikTok in the U.S. now, that China would say, no, you're not. I mean, why not block this deal?
Well, in essence, TikTok is caught in the middle here because there is a September 15th deadline where if the U.S. says yes and China says no, the U.S. can always come back and say, all right, we're banning TikTok in the U.S. on September 15th. And then ByteDance is put in a position where with an indefinite ban, it could lose quite a bit of value as all of the various TikTok influencers go elsewhere, as people that work at the company are caught in the middle. I mean, TikTok has been fairly forward, from what I understand, with its employees saying, look, if we are banned in this country, you will still get paid. Don't abandon us. We hope this is temporary. But really, we don't know how long a ban would last. So there's a serious risk here from TikTok's standpoint that they don't want to get banned. And that's why last week they went ahead and, in fact, sued the U.S. government over that ban to try to at least delay it if they could. Because TikTok itself and ByteDance realized that if there is a ban, it could spiral down a road that would be very bad for the company.
So, Alex, the deal gets sort of snagged on the idea that the Chinese want a say-so in the deal. But effectively, doesn't the U.S. government have exactly the same ability to veto a deal to any potential buyer, number one? And number two, where has the talk gone that the U.S. government might want to get a cut out of the deal, which is, well, let me just put it this way. If a previous Democratic administration had spoken that way about some multinational deal, I do not think that it would be well received.
So to your first point, you're exactly right. Basically, the U.S. and China now, in essence, have the right to allow or not allow a deal. Microsoft and Oracle have been in talks with the U.S. government to try to get this deal done now for weeks. There's a reason that those two companies are, in fact, the two companies that are this far down the road, and that's that they have this secure data storage element to them, which theoretically will be okay for the U.S. government. And of course, Larry Ellison is close to the Trump administration. There have been stories about that. Microsoft has been working closely. They brought in Walmart. Walmart is a big, obviously huge company in the U.S., red state appeal, et cetera. So that's the first point. The second point on whether or not the Treasury will get a cut of this deal, we actually don't really know where that stands. I mean, there has been a lot of talk out of the administration in general about, yeah, we want one, and then backtracking on this. No, that's more hyperbole. Maybe we don't want it. We don't know where that stands. Of course, there needs to actually be a deal before we even figure out what that means. My guess is on that one, there will be some sort of, twist of language around it. This is a taxable event. So in essence, I suppose the government could claim they are getting a slice of the deal because they'd be getting tax revenue out of it. But yeah, it's a fair point. We really don't know where that stands in terms of the government wanting a piece of the deal.
Some of that talk seems to have receded in recent weeks. It was initially kind of positioned as though the U.S. government was the investment banker to this deal, the broker to this deal, because we'd effectively put this company into play. Kelly?
Yeah, I can't wait to see how it turns out. We've never seen anything quite like this. Alex, appreciate your reporting, sir. Thank you very much.
Thanks, Kelly.
Alex Sherman, don't forget to go to CNBC.com to get the latest and the whole story on the TikTok saga. Ty.
TikTok to Zoom, Kelly. Zoom video stepping up as the place to be in 2020. Who'd really heard of Zoom a year ago? Not many people. Now everybody knows it. Shares are up 350% this year, with the stock set to report earnings after the bell. The traders will tell us if it has more room to zoom. Plus, another company profiting amid the pandemic. That would be Advanced Auto Parts. As used cars take over the road, the CEO will tell us what the path forward looks like for his company and sector. More Power Lunch after this.
This is Decision Tech. Find a stock based on your interests or what's trending. Get real-time insights in your customized view of the market. It's smarter trading technology for smarter trading decisions. Fidelity.
At CDW, we get there's no time for downtime. That's why CDW experts partner with APC by Schneider Electric to keep you up and running with a full range of edge computing solutions, including the new lithium-ion Smart Ups UPS with 2 times the battery life and cloud-enabled remote monitoring, so you can deploy data center-like resiliency with the performance and certainty you expect and the ongoing support you need. For IT infrastructure and uptime, you need APC by Schneider Electric and IT orchestration by CDW. People who get it.
America's biopharmaceutical companies have one very important thing in common: a common enemy.
We're making great progress because we're collaborating in ways that we've never done before.
In a matter of weeks, we've progressed from potential treatments
to antibodies and antivirals that have shown positive results.
To several promising vaccine candidates.
Because science
is how we get back to normal.
Danny.
What's up, Danny? Do you remember what this is?
Beautiful. Nice. We're so cheesy.
Start something great. Try video on Match.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
On Squawk Box, what the road back looks like for jobs and spending. Real-time numbers and analysis on the trends investors should be looking for. 6 a.m. Eastern tomorrow. And now watch Squawk Box anytime on demand.
All right, folks, GlaxoSmithKline and Vir Biotech starting the phase 2 and 3 trials for an antibody treatment for COVID-19. But that's not the only news in the race to fight the disease. Meg Terrell joins us with the details. Hi, Meg.
Hey, Tyler. Well, let's start with that news on the antibody trial. So this is actually the first in human trial for Vir and GlaxoSmithKline's antibody drug. But in this age of condensed clinical trial timelines, they're going to test it in about 20 people for safety. And if that looks good, they're going to expand it to 1,300 people in a phase 2-3 trial. The goal there is to prevent early COVID-19 from becoming severe and requiring hospitalization. And this follows the start last week of AstraZeneca's safety trial, and of course Regeneron and Lilly already being in the late stages of clinical trials for both treatment and prevention with their antibody drugs, with the first data expected from those companies potentially in September. Meanwhile, the vaccine news continues to come. Novavax announcing today that it had reached an agreement in principle with the government of Canada for Canada to purchase up to 76 million doses of Novavax's potential COVID-19 vaccine. That's if the vaccine is successful in clinical trials and is approved in that country, saying it could be available as soon as Q2 of 2021. No details on price in that release. Finally, guys, we also are getting updates each week on the enrollment progress for other vaccine trials underway in the United States. Phase 3 trials from Moderna and Pfizer, which began in late July. Both of those companies saying in updates since Friday that they have now enrolled more than half of the participants, the 30,000 people they plan to enroll in those trials. And when we see results from those trials depends on the pace of that enrollment and, of course, how much infection the people in those trials see. Tyler and Kelly.
Meg, let me ask you a quick question here. This Novavax deal with Canada is similar to one that, as I understand it, the U.S. government made with, you'll have to remind me, I think it was Pfizer. Are these, in effect, bets that these companies are going to be first to market? Or are they really rather more like an option or a hedge on those companies?
Probably all of the above, Tyler. So you're exactly right that the government did make that deal with Pfizer to pay almost $2 billion for 100 million doses of its vaccine if it's approved or gets authorization. So it doesn't pay anything unless the vaccine becomes available. And so governments around the world are probably trying to make bets on which vaccines will be available, which will work the best, all of this going into the considerations of where they're trying to place purchase orders right now.
All right, Meg, thank you very much. Meg Terrell reporting for us. Let's go to Seema Modi now for Trading Nation. Seema.
Tyler, one of the hottest stay-at-home stocks set to report earnings after the bell, Zoom Video, the teleconferencing platform, a major beneficiary of employees shifting to work-from-home setups during the pandemic, and that is well telegraphed in the stock. Analysts expecting the company to increase sales by more than 240% in the 3 months ending in July. Let's bring in the Trading Nation team to discuss. Mark Newton of Newton Advisors, and by phone, Michael Binger of Gradient Investments. And Michael, there was that note from JP Morgan this morning showing that after a year of going public, Zoom now accounts for 50% of the video conferencing market, which means the other half is dominated by Microsoft Teams, Skype, Cisco's WebEx. Which of these competitors do you think can give Zoom a run for its money?
Well, I really think Microsoft Teams is the one that's going to give them a run for their money there. You know, the problem with Microsoft Teams, though, is that it's mostly internal systems. So, you know, employees in the same company are using it, and they're using it a lot. We do. But your IT department mostly controls it, and they don't like you to go outside and video conference with people outside with Microsoft Teams. So, you know, I think Microsoft Teams is there. Skype is getting there. You know, Google has something called Meets. Facebook is in play. But right now, Zoom does really kind of own the market here, and the competition is getting heavier. But I think it's still Zoom's market to lose.
Mark, the stock continues to defy gravity, and those traditional metrics Wall Street analysts tend to use to measure how expensive a stock is seem to be thrown out the door when it comes to Zoom. It's trading at 215 times forward earnings. How do you trade the stock here ahead of earnings?
Well, you have to use technicals, Zima. I mean, I think that's been something that we've all come to depend on in recent months and years, and really know that it continues to work. I mean, Zoom, look, it's been up over 35% just in the last 3 weeks, so it's gotten extraordinarily overbought, and it's really been the same company. So as to whether, you know, it's justified to pay up now that it's 35% higher is really a tough call. So I like the stock technically on an intermediate-term basis. I think a lot of these new COVID infrastructure plays are worth being in on an intermediate term, but I think short-term, you know, it's really a coin flip, and it's really difficult to justify, you know, buying the stock here, you know, if you haven't currently owned, thinking that, you know, it's the right risk-reward. I would look at buying the stock really in the weeks to come if you pull back down to 275 or even down to 227 near August lows. But, you know, being over 300 for me is just a poor risk-reward technically. You're seeing traditional, you know, technical metrics like RSI being substantially overdone now, over 80 on both a weekly and a monthly basis. So, you know, certainly it looks great, but I think, you know, it's worth holding out. You will get a chance to buy it, you know, over the next month at lower levels.
Moment of truth after the bell. Mark and Michael, thanks for joining me. And for more real-time analysis of some of the best performers this year, head to our website or follow us on Twitter, Trading Nation. Kelly, back to you.
Seema, thank you very much. Still ahead on Power Lunch, keeping the economic engine running. Surging used car sales providing a boost to auto parts stocks. We'll speak to the CEO of Advance Auto Parts about that next. Plus, Datadog fetching some major returns, how the stock is riding the software surge, and diving for dividends. Where can investors find yield in this market? We'll ask fast money trader Steve Grasso. Stay with us.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Wedge patterns often signal.
There's some things going on that are benefiting us beyond that.
You know, one of the stood out to me as I was reading up on your company and that second quarter was how far off the analysts were on sales growth, which was fantastic, on EPS growth, adjusted EPS, and so forth. What did they miss here? I mean, they were way off.
Yeah, no, you're right. I think it's a really tough time to model. There's so many factors going on out there. It's actually probably the most fascinating time I've ever been in business, over a long career, because there's just a lot of variables out there. They're causing major shifts in consumer behavior. And it's important to be out in front of those shifts. I mean, we had to repurpose our advertising in April due to COVID. We launched a suite of services we call Advanced Same Day, which allows people to get parts very quickly, advanced same-day delivery. We were the first company in our industry to do that. Advanced same-day curbside, which gives people contact-free delivery. And I think if you're a research analyst, keeping up with everything companies are doing to respond to these consumer shifts is very difficult.
And obviously, you've had to take steps to protect your workforce from viral spread, your customer base from viral spread. Did you see in that second quarter, or are you seeing today, regional differences in terms of sales strength?
Oh, we definitely are. I mean, we've taken safeguards. There's really nothing more important than the health, safety, and well-being of your team members and customers. I think companies have learned that more than ever in the recent months, and we've been honestly doing it for a couple of years, Tyler. I mean, we launched a very unique stock ownership program a couple of years ago called Fuel the Front Line, where we give stock grants to our frontline team members. And we just finished our third year, and we're now up to over 20,000 stock grants. It's dramatically improved our retention of key people and reduced our turnover. And then separately, we stood up a health and safety team in the early part of the year, and it was extremely helpful for us during the pandemic, because this health and safety is extremely important for the company. We've been on it for a couple of years and reduced our incident frequency rate, our collision frequency rate. And then when the COVID pandemic hit, we were very quick to get the key actions out to our people and keep them safe. So it's a unique time, but there's nothing more important than the health and safety of your people, and you've got to make sure they feel safe coming into the stores.
Quick 10-word answer or less, how is the current quarter stacking up?
We feel really good about it. We're launching Die Hard, which is an iconic American brand. We're going to be really exciting. We've got some great innovation coming up on it, and more to come. So looking forward to it.
All right. Thank you very much. We appreciate your time today. Continued good luck to you. Kelly.
Thank you for having me.
Tyler, thank you. Coming up in Power Movers, a potential TV deal, some bullish analyst coverage, and a biotech gets bought out by a company you might not expect. Speaking of movers and buyouts, Datadog has had a huge surge since its IPO. Could it be an acquisition target? Stay with us.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Wherever you start, SNHU is where you can finish.
Here we go.
And it's it.
Yay! Southern New Hampshire University. Like it's a hope.
Look at that! Master's degree! I did it!
I did this for my children. I am very proud of myself.
Finish your degree at snhu.edu.
Some companies still have HR stuck between employees and their data, entering data, changing data, more and more sensitive personal data. And it doesn't just drag HR down, it drags the entire business down with inefficiency, errors, and waste. It's ridiculous. So ridiculous. With Paycom, employees enter and manage their own data in a single, easy-to-use software. Visit paycom.com and schedule your demo today.
You know there's a 30-minute limit, right? Tell that to the right.
For those who were born to ride, there's Progressive. 30 players, all fighting to become champion, but only one can win the ultimate prize. History will be made here at the Tour Championship.
Alright, my test. Good evening, morning, afternoon. This is Jal Liard of Team Etoro, Pilipinas. Kamusta, laksa. Or for the long wait. So yeah, today is the last day of August 30, 2020 trading day. August 31. Since I'm following the time. Today I'm basically just the newly modified Dow, right? Showing it's kind of a bit dropping. And like I've always been talking about for the past 2 weeks, there's a potential dip. We don't know how deep, of course. All we can do is parang project lang, diba? There's a big chance that it will drop.
Big in pet food.
Main question is how deep.
Another big mover to tell you about is
How
Datadog.
deep,
The
right?
stock
Not
is
how
doubled this
deep,
year
but
and
how
tripled
deep
from its March
will it
low.
go?
Let's bring in Josh Lipton to talk about what's behind
Yeah, we're waiting
this
for that.
run. Josh.
So right now we are just holding.
So Kelly, Datadog has
for all the
delivered.
copiers
Pull up
and
a chart,
investors
and you can
out
see
there
just the remarkable run
holding our
Datadog has
positions
seen here, but also
for
worth
swing
noting,
trades, right?
in its market cap
Dropbox,
in just the last 5 months has
Bitcoin,
more
Ethereum,
than doubled now to about
Beyond
$25
Meat,
billion. Company
JP
offers
Morgan,
a platform
Goldman Sachs,
allowing
and
customers to monitor the performance of their apps,
we have
networks,
already
and computing
opened,
infrastructure. In other
closed
words, let's say you're an IT
a lot of
manager at a
positions
retailer, you
with
can
them,
use
open and
Datadog's
closed, right?
tools
Bring
to
in and
make
out,
sure your company's
taking
apps
every
are
advantage that we
all
could take
working like
advantage
they
of.
should. And that's important because so many more people
You can
are
see
now
we have
depending on
a very
online
profitable
services during this pandemic.
month,
Datadog helps
August month,
companies
20%
spot technical issues
profitable.
if and when they do
Of course, we
pop up.
will always
Customers
have
include
those negative trades.
Samsung, Activision, Sonos, and DreamWorks, among others. Jack Andrews
and
at
that's how
Needham
just
says
trading
rivals
works.
would include
You
Cisco,
win some,
New
you
Relic,
lose
and
some.
increasingly
As long as you
Splunk,
win
but he
bigger
argues
than
that
our
Datadog
losses,
boasts first
is
mover
fine.
advantage.
Right?
They're
We're not
developing
here
and
for 100%
introducing products
execution,
that says
but we're here
faster than
for
competition.
positive
On the other hand, other analysts I spoke with do
portfolio
have concerns
every
about
end of the month. That's
valuation
the
at these
goal.
levels,
That's
and the
always
company
been,
is not immune to
of course,
economic turbulence.
projected
Earlier this month,
towards
in
the.
its earnings report,
You
Datadog
see,
did say
we're
macro
nearing
uncertainty is having
to
an impact. Stock
completely
is down
wipe
about
our
10%
losses
in
this
August.
year,
Guys, back to you.
and I am aiming
Josh,
for
what
that to be
about
done within the
possible
next.
acquisitions? I mean, it's interesting to
Hopefully,
ask about them being the target
given
with their
that
share price.
we won't
Maybe
be
they
experiencing
could
another red
be
month.
looking around at other players, but
Okay,
where
we're
do you
looking
think?
good.
I'm sure this
Past
has
3
caught the
months we've
eye
been
of
green,
larger rivals, right?
and forward to September.
Yeah, whether it's an
Beginning
acquisition
of
target, I
September,
mentioned I spoke to
like I
Jack
posted
Andrews over at Needham. Jack would argue
last
in
or
theory
6
it
days
should be
ago,
strong
last week,
management, strong
that I'll be
technology, strategically
depositing,
very well
like I
positioned,
always
at
do every
$25
month.
billion.
I'll be
Jack's firm was
depositing
probably at this point only the
at
biggest
least
of the
2.5
big
of my current
enterprise
portfolio,
companies
so
to
that
really
means
make a play here. So
doubling
probably
it,
in
and
reality,
then
less likely,
around
guys.
Yeah, no,
50% more.
Josh, thanks
I'm
very
not completely
much.
sure
Josh
about the exact
Lipton on
amount.
Datadog
I will be
for us.
starting to depositing starting today or later today. Actually not today, but tomorrow, right? September. Technically tomorrow, because number 1 in US time, right? Not the Philippines time. I'll be starting depositing there, so all our copiers will notice the notifications about me adding funds. You don't have to if you don't want to add new funds, but if you can, then please do. That is the best time to do so. Aside from, not to mention that the dollar is lower right now,
so they can focus on today while saving for tomorrow.
My reputation was
48
trashed
right
online. I felt completely helpless. My entire
So
career and business were
it's a
in
good time
jeopardy.
to deposit. That's one.
I called
Of course,
Reputation
you always
Defender.
want to a habit na add ng fund like I do. Parang compounding interest kumbaga. Your account. Because as always, and I'm sure you know this, na the higher your capital, the higher of course your returns, right? Bigger the capital, the bigger the gains. So if you are stuck with 200 USD since the very beginning, since you started last year, then of course you will not feel, the actual returns, right? Even though the percentage is high, like 10% from your portfolio, you just see a few dollars there, diba? That's just how it works. So expectations wise, I hope you already have that. This account is also a long term, so kaya nga, we have here in our bio that our monthly profit target is at least only 1%, minimum 1%. So anything above that is a bonus, of course. See, this month we had like a 5% from the target. Okay, so that's just it. Right now, today, I am actually just observing, pitching to go in AMD, Tesla, and Apple. The hype, right? Still goes on. It's kind of crazy, right? It's just a hype lang to mga tao. Splits, right? Like Tesla and Apple doesn't actually really mean anything in terms of the valuation of the stock. Just it is split because it's too high now for the buyers to buy in, right? But of course, obviously, most of the splits, meron talagang mga rally na nang, right? But just be careful, don't get FOMO'd, and as much as possible, do not, or as much as possible, do not use leverage, right? Wag ma-FOMO, wag mag-too-excite. Wag ma-FOMO, wag ma-hype. Always do your own for your trade or go into it. Hopefully that will things na mga discipline natin will remind us trading. Nangangati ako but hindi ako pumasok. I followed my strategy and just to make sure that I am safe towards the end of the month, right? But I might, again, this is not an investment recommendation because we don't do investment recommendations here, but I might go in to Apple and Tesla next month. Technically, 31 pa ngayon in US hours, but in Manila or Cebu time, it's already per month. Great. Okay, I think that's it. Question of the day, by the way. Yeah, I'm bringing back the question of the day. Question of the day is, let me see our tracker here.
Back to you guys.
Yeah, actually, I already answered it. It's about the split, right? The stock split. So, ulitin ko lang, the stock split that happened with Apple and Tesla is not exactly like a big thing. It happens from time to time. Actually, Apple already that like I think
that taught our children, fought for freedoms, and contribute to the most industrious workforce in the world.
There's a
same hands push the
article here,
and tear down the barriers of resistance. It takes many hands to build a world of work that works for all. Now more than ever, we need a show of hands to move forward together.
Look for the post. I actually posted that.
I'm Hector. I am a delivery operations manager in San Diego, California. We've had a ton of obstacles in finding ways to be more sustainable for big companies. We were one of the first stations to pilot a fleet of zero emissions electric vehicles. The Amazon vans have a decal that says shipment zero. We're striving to deliver a package with zero emissions into the air. I feel really proud of the impact that has on the environment, but we're always striving to be better.
In reply to a post,
do everything I
Do
can to
your
protect the
own
environment, to make
due
sure they
diligence.
see the same beauty I've seen in nature. My goal is to lead projects that affect the world. I know that
And
to be
so
great requires hard work.
Introducing Stocks by the Slice from Fidelity. Now you can trade stocks and ETFs for any amount you choose, instead of buying by the share, all with no commissions.
and okay,
Stocks
here we
by the
go.
Slice from Fidelity.
So yeah, I found the article. I think I was.
Mr. Wonderful here. It's hard for everyday
Yeah.
people to get access
So then
to
yung
startup
nang-replyan ko sa
investments.
post.
But with Star
Ngayon lang.
Engine, you can choose
And I posted this
between
on news
hundreds of startups within your
topics natin sa
portfolio.
group.
It's your
So
turn to
history
become a shark. Visit
Apple stock split says
starengine.com
investors didn't
today.
rush into buy low. Oh yeah, exactly what I
Big tech and
also
growth names
would
dominating
tell
this
our
market. But for
mentees.
those
Do not
looking for
rush.
safer
Wag
plays,
ma-FOMO.
good yields can be
FOMO
hard to
means fear
find.
of missing
According
out.
to Janice Henderson,
And
global dividends plunged 22%,
don't get
or
so
around
hype.
$108 billion
Right? Wag
last
ma-hype.
quarter. Now the Federal Reserve
Use
has paved the way
your
for lower rates for
coconut
longer.
brain.
Here to help us hunt for yield is Fast Money's Steve Grassa with his patriotic
Right.
face mask today. Steve, welcome. Give us your top
Thanks, Kelly.
names.
How are you?
Good.
So let's just take it from let's say best to worst, or let's say, in my opinion, safest
So
to
yeah.
least safe.
Oh, nagmasking.
Nextera,
Nasa
NED.
news sa
It's
CNBC.
up 50%
Eh, sorry
year to
na
date. That's number
distract
one.
ako. So yeah, so
The
key points
dividend on this
dito
one is only
sa Apple
2%,
announced
so you're
4-to-1
not
stock
really,
split
getting
in July, begin
a
trading on the split
tremendous
adjusted
dividend,
date.
but the
Well, this
equity
Monday.
is outperforming the overall
Tech
market.
Giant became the
People
first
seem to like that it's wind
trillion
and
pre-stock split.
solar. It does
Company
have some
fifth stock
nuclear
split
angle
with
to it, but the
investors
wind
to
and the
buy.
solar is what attracts investors.
Warning.
The second one
Right.
for me would be Pfizer.
As far as
This one I've
question
owned
of
forever.
effect on
This
the
is
market, there is
a
really
real
nothing
example of a dividend
in terms
that
of
the
effect,
stock
right?
is
Yung para
basically down
what you
3%
call
year to
that? I
date.
guess yeah, there's
Its
short-term
dividend
effect because of
is
course na-hype
4%.
mga tao, di ba?
So you've almost given
But
back all of that advantage of having a dividend play.
there's no
But
reason,
it
right,
is in the
to be
center of
hyping
COVID
it.
and all the other
Yun
things
nga,
that are involved
hype
in
pa
the
rin.
environment. Why I'm wearing
People
a
are
mask
people, di
today.
ba? So
And
this will be
does
the
have a
fifth
history of
stock
blockbuster
split ng
drugs.
Apple.
So that
Let's
would
see.
be
Way
sort
back
of the middle
2014,
ground. Now, when you
2005.
go to an ExxonMobil, you're taking risk.
Ay, sorry.
ExxonMobil down
Ganito pala.
42%
87,
year to date,
2000,
but you get
2005,
roughly a
and then
dividend yield of about
first
8.7,
day
let's call
is
it 9%.
most recent.
That could be gobbled up in that year-to-date
So yan.
performance in a bad way.
Excuse me.
So if you have some risk appetite,
So yun.
you want to
But
reach
make
out
sure
further on the
to
spectrum,
always practice your due diligence.
and then if you don't want to
You
play
know,
a name
diversify, and manage your risk. Manage your risk.
500
So
dividend.
do not
The
just
ticker
put everything
symbol
in one stock, right? If you
NOBL.
want, then go ahead.
These are
It's
the
up to you. And if you
top
think that's a
dividend
good
plays.
buy, then buy.
These are supposed to be the
But
most
we don't
sacred,
do
dividend
investment
plays.
recommendations here in
One
Team
is
Etoro Pilipinas.
roughly a dividend yield
Please
of
bear
about
that in
2%.
mind and be
But
careful with your
the
money.
index,
It's
the
up.
index, the ETF,
At the end of the day,
is
it's your
flat
money.
year to date. So there you have it. You know, I'm not a big
Okay.
fan
Ayan,
of using
so
dividends to
what else?
outperform the
Tesla.
market, but if you are so inclined, there you
Same
go.
thing with Apple.
I like how you structured it. It was like Goldilocks, you know.
Right,
You
there's
had the
really
different bowls
no
of porridge to pick from,
ang tawag ito,
depending on your risk appetite.
technicality
Reminder that dividends can be risky.
basihan
Steve, thank you, sir. It's
para
good to see you.
mag
Tyler, we're going to
buy
call
in.
that a Jexit. That was a
right.
Jexodus. That was a Joe Exodus we witnessed earlier.
She said,
Indicator ko, charting ko nasa taas kasi because I was adjusting the volume
I know when I have 10.
levels.
I was going to say that.
We got it. That's her hand. We got to go.
Medyo nawala yung mga
We'll
spots
see you
ko.
later.
Bago
Let's
yung
go to closing bell.
volume. So.
Good afternoon, everyone. Welcome to the closing bell. I'm Wilfred Frost, along with Sarah Eisen.
And
Excuse me. The Nasdaq soaring today. The Dow sinking in
Yeah,
the
kasi
last
it's
trading
drop,
block.
right?
All
Kasi
this tapping
andun yung charting ko sa around 2,000 levels. So, but then the price dropped because of the split. Yeah, of course we're back at 400s. Now it's hyping back to 500 now. Excuse me. I'm not on too big, okay?
Also strong today. More encouragement from the Fed as Vice Chair Rich Clarida affirms a low-rate policy even if unemployment starts to fall. And split stocks,
Yeah, so,
Apple and Tesla rallying. Apple up about 5%,
Nasdaq and
today,
SPX.
Tesla up about 10%
Well, look at that.
today.
Even
Tesla's
if
now
nag-rally yung
surpassed
Tesla
Visa
and
to become the seventh most
Apple, look at the dope.
valuable company in the
Still
United
dropping.
States. 59
Dropped.
minutes until August is in the
And it's
book.
around
We are
right now
waiting for a record
0.71%
close for the
negative.
Nasdaq, possibly another
In my opinion, you have to be very, very careful. Very, very careful.
Welcome back, Wilfred. Good to have you back here. Coming up on today's show, Delta CEO Ed Bastian joins us with his latest thoughts on the state of the airline industry, stimulus money and job cuts, and of course his response to United's move today to eliminate change fees. We will also speak with Mohamed Al-Arian about the exceptional month for the Bulls and where he thinks the market is heading next after we're looking to cap off a 7% up month for August. And the work from home winner Zoom reports earnings after today's close.
All right. Okay. I think that's it for my comment
We'll find out in just about an hour.
later
Let's get straight to
voice live in. I'll be back tomorrow. I'll be still tomorrow. Sa mga lahat na manonood ng replay dito sa YouTube channel natin or dito sa Facebook page, we'll be posting that sa YouTube channel natin later. So I'll be back tomorrow night also. So I'll be streaming with all the feed that you might want to see or like or want to watch. I'll be muting myself, but I'll still be live until 4 this hour. So closing bell. All right. Thank you. Thank you.
Below the surface, especially a lot of those cyclical groups, industrials, financials are on the weaker side today. Seems like some month-end noise. Now, we keep pointing out a lot of attention over the weekend about how we've had this acceleration through July and August. It has left the S&P in something of a technical overbought state, maybe people getting a little bit overexcited at the margins. That can kind of correct itself a couple of ways. Market just calm down. You have a lot more days like today that are flat and essentially let the trend catch up to it. Or you can have some kind of a sharp pullback, which history says September often brings. No way to say exactly how that's going to play. There is a month-end effect, though, stocks versus bonds that might be at work today. Take a look at on a month-to-date basis, the S&P 500 against long-term treasuries. That's a very, very wide spread of outperformance by equities versus bonds. There has been some expectation you might see some month-end rebalancing out of equities into bonds for this reason. In fact, bonds are strong today as well. And take a look, though, on a year-to-date basis of the same two instruments there, which is the long-term treasury ETF. Actually, this is 6 months. This is not year-to-date, but it actually shows an interesting kind of divergence here in the last month, or a little bit more than a month right now. By the way, if you own a portfolio, traditional 60-40, you're up 9% total return year to date. That's well ahead of what history tends to give you. And so for as turbulent as things have been, that old approach has actually paid off this year. It's outperforming what it normally gives you in a given year, guys.
So August is set to be the best month since it's either going to be 1984 or 1986 at this point. And it really has, Mike, been an uphill climb since April. August is actually the best month since April, but it's the best August since the mid-'80s. So what do we need to see in September to keep it going? We still haven't seen stimulus from the fiscal authorities, at least another new package. And there's still questions on the virus. What do you think? What boxes do we have to check to keep this momentum?
Well, first of all, I would say July and August taken as a block has been amazingly impressive, up 13%, and it's extremely rare to see both those months each up 5%. So that's something that basically puts you in a different league in terms of how good the summer has been, which again means the bar is pretty high for continuing. I do think the virus data is getting a little bit of attention now. In other words, have we seen most of the benefit of declining national case counts that we're going to see? A lot of attention on flare-ups in college towns. We're going to see about back to school. So that has been kind of the backdrop of what's going on right now. And then we're going to be getting, I think basically the economic data surprise charts have to keep looking pretty good. They've been incredibly strong in terms of economic numbers coming in relative to expectations. That's actually been the answer to those who say there's a massive disconnect between the equity markets and the economy. It's the rate of change of how much things are getting better, not necessarily how good they are or how bad they are. So those things I think are significant. The big question is any of it truly going to matter if in fact the market itself has just gotten a little bit ahead of itself and pulled forward some gains in the summer?
Mike, thanks so much for that. S&P just negative as we stand. The Nasdaq up a healthy 4%. Shares of Tesla jolting to yet another record high today as the company's 5-for-1 stock split officially took effect. Phil LeBeau has more on the move. Hey, Phil.
Hey, Wilf, we're looking at maybe getting to $500 a share by the end of the day. Now, who knows? But it wouldn't surprise me if it does get there. And this move in Tesla shares today, it means that the market cap continues to hit record highs, now well over $440 billion. Let's do a comparison. Tesla versus the top 5 automakers in the world. We're talking about Toyota, Volkswagen, Nissan, Renault, Mitsubishi Alliance, GM, and Hyundai. No comparison. It has a higher market cap, and yet in terms of vehicle sales, 367,000 sold by Tesla last year, more than 44 million by the top 5 automakers. Reminder that in 1 month, we will get the Q3 deliveries from Tesla. We'll see if they're still on track to hit the target of at least 500,000 vehicles being delivered this year. And as you take a look at shares of Tesla, we're showing you this since August 11th. This is just the moves since they announced the stock split. Remarkable, guys, that it continues pushing higher. And I was joking when I said $500 a share. It may get there.
So 74% since August 11th is truly astonishing. Phil, stick with us. Let's broaden out the discussion and bring in Joe Osher from JMP Securities. Joe, kicking things off, since August 11th, when they announced the stock split, as we just showed, 73%, 74% gains. What portion of that 74% do you put down to the stock split?
I think it has to be a significant portion of it. To be fair, I do think that some of these investors are starting to realize what Tesla is. And we've said this before. I think that this is a category killer. It's a business that can become a $100 billion company in a couple of years. And so some of the investors see that, but some of them are just clearly chasing the split.
Well, I mean, it's already a $400 billion company. I assume you mean in terms of revenues. But in the short term, Joe, Phil mentioned deliveries coming in a couple of weeks or whatever it might be. Is there any data release from the company that could derail the current rally, or is that all irrelevant for the next 12, 24 months?
It probably is. I heard you mention earlier this year's delivery numbers. If one were to try and value the company on this year's numbers, you're not going to get very far, right? The question is, look, this company, I think next year can generate $43 billion in revenue and sell, 800,000 units. If it can stay on that trajectory, then this isn't completely insane. I think the stock is fully valued. But look, if people are just going to try and value it on this year's number, which is maybe a little over 500,000 units, obviously you can't get there.
How's the rest of the industry watching this incredible rise, Phil? And what are they doing in terms of the competition from the major automakers, but also the upstarts that have also been very hot in this market, like Nikola?
Well, they're investing heavily in developing electric vehicles, and you'll hear this all the time from people. They'll say, there's a lot of competition coming. Wait until that competition gets out there. Tesla won't have the same dominance that it has right now. Theoretically, you are correct. But I have to tell you that I have heard this, and I'm sure Joe has heard this for 4 or 5 years now. I used to hear people say, 2020, you wait until 2020, Tesla's going to have its lunch eaten. We're in 2020, and where's the competition? So, I mean, there are a lot of investments that are out there, but at this point, they're investments and there are promises. We have not actually seen a true competitor, somebody who can come out and knock Tesla off the block when it comes to an actual electric vehicle.
Joe, as you said, that clearly people aren't pricing this off next quarter's delivery numbers, but what about any other big news items that could hurt the stock, whether it's China trade tensions? How important is China to the long-term outlook for this stock?
China's really important, and I think if we were to sort of go through that exercise, it would be a significant hit in the Chinese market, which is propelling growth for them right now. Over the longer term, though, to go back to what Phil said, it's going to be somebody else getting their act together in this space, and it really is astonishing how little the major OEMs have accomplished. Volkswagen's probably the closest, but and we've got lots of startups like Nikola, Lordstown Motors, all these companies doing SPACs. But boy, if you look out there and say, is there a car I can buy right now that is equivalent to the Model 3? The answer is no, and I can't even see where that competitor is going to come from. So as long as that continues to be the case, Tesla is going to be a richly valued stock.
Phil, no offense to Joe here in this conversation, but the analysts have just been wrong. I mean, they've missed this move, and they've had to catch up and revise their forecasts and revise their price targets. It's been obviously very hard to predict. Where's the street now on expectations, and how do analysts, not just Joe, but on the street, who can continue to justify the valuation, and what are they telling their clients to do?
Well, first of all, I've not heard one, maybe a few. I mean, ARK Invest has been out there way above everybody else in terms of price targets and justifying a valuation, but most have lower price targets, and almost every analyst, when you read their notes, it's in big, bold letters, we do not justify the valuation of this stock right now, and we're not sure anybody can justify it. You heard Joe say that earlier. So the price targets are lower. I'm not sure that matters, guys. I really don't think it matters. I've not heard one person come up to me and say, boy, I'm thinking about buying Tesla. Where are most of the analysts at in terms of a price target? This is pure momentum. Maybe not 100% momentum, but that's what's driving it right now.
Phil LeBeau and Joe Osha, thank you both very much.
Thank you.
After the break, Buffett's birthday surprise, the Oracle of Omaha turning 90 yesterday and taking the occasion to disclose a major bet on Japan. We'll discuss that latest move next. You're watching Closing Bell on CNBC.
As business moves forward, we're all changing the way things get done. Like how we redefine collaboration, how we come up with new ways to serve our customers and deliver our products.
This one is cheddar. It's delicious. Oh, you look so healthy.
But no matter how things change, one thing never will. You can rely on the people and the network of AT&T to help keep your business connected.
Before money, people traded goods, tools, cattle, grain, even shells represented value. Then currency came along. They made it out of copper, gold, silver, wampum. Soon people decided to put all that value into a piece of paper, then proceeded to wave goodbye to value, printing unlimited amounts of money as they passed the buck to the future. That's why it's time for digital currency and your investment in the Grayscale funds. Go digital. Go Grayscale.
On Squawk Box, what the road back looks like for jobs and spending. Real-time numbers and analysis on the trends investors should be looking for. 6 a.m. Eastern tomorrow. And now watch Squawk Box anytime on demand.
This is cellulose acetate, a plant-based material that's not only extremely durable, but also quite flexible, making it ideal for Warby Parker glasses, which, by the way, start at $95, including prescription lenses. Try 5 pairs for free at warbyparker.com. Oh yeah, about those prescription lenses. Warby Parker glasses come standard with custom-cut polycarbonate lenses that have been treated with scratch-resistant and anti-reflective coatings. Nice. Try 5 pairs for free at warbyparker.com.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
This is a crate from KiwiCo. Each crate has an awesome science, art, or engineering project inside. Parents can order online and it ships right to your door. Learning has never been so fun or convenient. Get 30% off. Visit trykiwico.com.
The investing world has been waiting to see what Warren Buffett would do with his enormous cash position in this pandemic, and it looks like the answer is to put it abroad. Berkshire announced yesterday it has bought roughly 5% stakes in 5 different Japanese trading conglomerates, a total bet of more than $6 billion. The names there for you on the screen. And just a couple of observations, Mike and Sarah, that I wanted to make about this. The first is that he has been a net seller of U.S. cyclicals, the banks and the airlines, and clearly now deciding to buy Japanese cyclicals. You could argue they're more sort of pan-Asian or even global, but they're certainly not U.S. And that's a big contrast, of course, to after the 2008 crisis, he's buying banks and railroads and saying that those were all-out bets on the U.S. economy. The second point is that these stocks have similar characteristics as some of the U.S. banks he's been selling. By that I mean they're below book value, they have double-digit ROEs, return on equities, above their costs of capital, and in that sense accentuates to me his preference for Japan over the U.S. at the moment. It's not like he's found the next Apple. Instead, he is buying something kind of similar to some of those U.S. financials, but just ones he prefers abroad. And the third point is this isn't the typical stock picking that we know when he buys Apple or he buys Coca-Cola. He's bought 5 of these, not just one, spreading his bets in that sense, but they themselves are incredibly diverse, predominantly trading houses focused on energy and commodities, yes, but Mitsubishi operates the biggest convenience store chain, for example, in Japan. Mitsui operates a large hospital chain. In that sense, they kind of got PE characteristics. They're conglomerates, obviously. They're actually kind of similar to Berkshire Hathaway in a way, and he's kind of giving his money to somebody else to make those final stock picks as opposed to doing it himself. So an interesting investment there, and just a few observations in terms of where his preferences lie at the moment.
Yeah, I was just going to say, I mean, in terms of it being, as you say, a sector bet and a geographic bet, it is definitely interesting. You think about his holdings, Berkshire Hathaway's holdings, in terms of the wholly owned businesses, it's massively exposed to North American economic growth with the, the utilities and the infrastructure stocks and the railroads and things like that. So a diversifier. The Berkshire Hathaway sold some debt over in Japan in yen terms earlier this year, so this could kind of pair up something on that as well. So I see the financial rationale for it, but also do agree that it's not the same kind of great business we found here at a fair price, and we're going to hold it forever because we like how it's managed or the business dynamics of it.
Maybe, guys, he's trying to diversify his exposure away from U.S. dollars, buying in Japanese yen and buying Barrick gold, a classic diversifier for the dollar, which is, of course, what the currency nuts are speculating. But the other thing that stands out to me, Mike, is that it's not the typical Buffett crisis playbook, buy America, buy some of the most beaten down companies. Yeah. He sold the airlines and is selling the banks, which are also out of favor right now in the current crisis. So it's an interesting divergence, I think, from what we're used to here.
Well, the crisis only lasted a few weeks, if you want to think about asset values. So that's one of the reasons I think that, buyers like Buffett and Berkshire Hathaway didn't really have the opportunity for all that stuff, that distressed merchandise, to come their way. And yes, you have to look elsewhere for that reason. And it makes sense on that level, I do believe. And, the airline sale, as far as we could tell, he maybe took a $3 billion, $4 billion loss on that total. He's up $50 billion in Apple since the March low. So I think, and this is a $6 billion bet. So I think you have to keep it in perspective in terms of, it's more than a $500 billion market cap of Berkshire, and this is stuff around the edges.
All right, well, either way, reading into Buffett's moves, always interesting. 42 minutes left of trade here for the session, and we've still got growth outperforming value right now. Technology is the best performer in the market. Consumer discretionary, healthcare also positive, but most stocks are lower on the day. S&P is pretty much flat. Dow's down 200 points despite Apple's gain. We've got energy, financials, and materials bringing up the rear. The NASDAQ higher by 1%. After the break, a supersized controversy. McDonald's slamming former CEO Steve Easterbrook as morally bankrupt as a new figure emerges in the company's probe. We're going to talk to a Wall Street Journal reporter who's been closely following this case. That's next.
COVID-19 has launched the greatest behavioral change in our lifetime. We vaulted 5 years in the adoption of digital in just 8 weeks. Now we're speaking to leaders who are asking, how do we bottle the stuff that worked? Even before the crisis, 92% of business leaders felt that their business model would not remain viable through the current rate of digitization.
For Marcus, the pandemic has strongly reaffirmed our unique business model of digital combined with a strong balance sheet. We can innovate the distribution and consumption experience of financial services.
We've created a brand new processing plant by just making incremental improvements. Our people did it with AI, will, and enthusiasm.
The road to recovery is paved with data. Those companies that can harness it best will set the pace.
Introducing Schwab Stock Slices. For as little as $5, now anyone can own companies in the S&P 500, even if their shares cost more. At $5 a slice, you could own 10 companies for $50 instead of paying thousands. All commission-free online. Schwab Stock Slices, an easy way to start investing or to give the gift of stock ownership. Schwab, own your tomorrow.
Right now, you have to think about the pandemic in the context of every story and every stock. Over 25% of the S&P 500 is tech. Tech has been carrying the market. Tech was made for this moment. The stock market has already factored in so much good news. Now it's time to see if it lives up to the hype. We talk to the most influential investors at the most important time. This is a financial crisis, an economic crisis, and a health crisis, all wrapped into one. At CNBC, we deliver the market insight you really can't get anywhere else.
Welcome back. Breaking news on Delta. Phil LeBeau.
Hey, Wilf, it's a copycat business in the airline world, and following United's announcement that it will be scrapping ticket change fees permanently, Delta is now saying it will do the same thing. For some perspective here, this is a $2.8 billion revenue source for the U.S. airlines last year. I looked at the numbers this morning. It was something like $625 million is what United got from ticket change fees last year. Delta, I think, was a little bit higher than that. Not surprising that we have seen this from Delta. You don't want to see one airline have an advantage over you, and so Delta is now matching United in terms of permanently waiving ticket change fees. Guys, back to you.
Good for the consumer. Phil, thank you. We're going to talk to Delta CEO Ed Bastian about this and a whole lot more in just a few minutes here on the show. First, though, let's talk McDonald's and McTrouble. The drama between McDonald's and former CEO Steve Easterbrook taking an explosive turn today. The burger company slamming Easterbrook, calling him, quote, morally bankrupt after he requested the restaurant's lawsuit to claw back his severance package be dismissed. McDonald's filed a suit earlier this month after discovering Easterbrook allegedly lied and covered up information regarding 3 other sexual relationships he had with employees during its internal probe last year. All of this comes on the heels of a new report from the Wall Street Journal that McDonald's former head of human resources is now emerging as a focus of the investigation. Joining us now for more is the author of that report, Heather Haddon from Wall Street Journal. Heather, thank you for joining us. This saga is unbelievable, and it is unusually public and getting pretty heated between the former CEO and the company. What's your sense of the company's reaction to all of this and the fact that they are taking it and airing so much public dirty laundry?
Yeah, it is really unusual for these kind of issues to come out so publicly. Often a board of a major company will handle these kind of matters quietly, but McDonald's has, taken this very strong stance to try to claw back severance that it paid to Steve Easterbrook, their former CEO, after he first stepped down from the company in November. And so they filed this lawsuit raising a number of very serious allegations against him concerning sexual relationships he allegedly had within the company. Now that investigation is ongoing, the company tells us, and so it's also looking to allegations that Mr. Easterbrook maybe covered up other improprieties of employees. It's looking into the HR department for the company more broadly. And meanwhile, this lawsuit is playing out. So Mr. Easterbrook's attorney responded about 2 weeks ago, saying that this lawsuit has no merit for various reasons. And the company very forcefully responded today. It said, once again, that its former CEO lied in very stark terms to the company and its board and its investigators when it was first looking into this, and said that it has every right to sue Mr. Easterbrook for that severance and claw it back.
Do you think there's any blame here that lies with the company board? And that is why the company is being so defensive and so harsh with its public criticism against the former CEO. Do you think they're being defensive at all?
I mean, we really don't know. That's what's going to play out in court. Who's to blame here? One thing that was raised when the suit was first filed is the thoroughness of the investigation that the company engaged in. They said that they did the investigation they needed into the matter in November when it was first deciding to fire the CEO and offer him quite a handsome severance package at that time. So the question is, some have raised, did the board do a thorough enough investigation now that so many other really damning allegations have come out in July when it's done this further investigation response, a tip, it said it got into further issues at the company. So I think the investigation is one thing that will be explored if this does go to court. And actually in McDonald's own response today, they said this just deserves to play out in court, how it handled its investigation, and it's going to defend that.
Well, to that point, Heather, and it may well not be a legitimate defense for Steve Easterbrook, but if there was an insufficient original investigation, who does that fall upon? I understand that Easterbrook was CEO and sort of outgoing CEO at the time, and that might have made it harder to do a full investigation, but the board surely should have been independent of that. The board is the same throughout. The chairman is the same throughout. Did they have a lot to answer for?
Yeah, so they said, McDonald's has said that they've been very thorough in this all along, that they hired independent counsel to conduct that original investigation, and now that they've actually retained additional independent counsel for this further investigation into the former CEO and his conduct. Their basic stance is that the former CEO lied to them in a way that made it very difficult for them to further expand on that investigation based on the knowledge that they had at that time. So again, the question is, perhaps another independent counsel could have looked even further if they felt it was in the right for them to do so. The company said that they were using the facts they had at the time to explore what they knew then.
Such a crazy story. Heather, keep us posted on what you learned. Thanks for joining us today.
Thanks so much.
Heather Haddon from the Wall Street Journal. Still ahead, we'll speak exclusively with Delta CEO Ed Bastian about its just announced move to eliminate change fees following United's move earlier today, and a whole lot more. And as we had a break, a quick check on bonds for you. Yields are mostly lower to start the week, but they have moved higher throughout the month of August as we've seen stocks rise more than 7% for the S&P 500. We'll be right back.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Everybody wants to become a better leader. The new book, How to Lead, Wisdom from the World's Greatest CEOs, Founders, and Game Changers by David M. Rubenstein shows you how. The essential leadership playbook, How to Lead, is available now wherever books are sold.
There's a lot of sameness among online brokers these days. IBKR stands out in the crowd. We offer the lowest trading and borrowing costs. Our clients have the choice of investing globally or locally in stocks, options, futures, forex, bonds, and funds from a single integrated account. Our premier technology enables you to optimize speed and efficiency, perform sophisticated portfolio analysis, and manage your accounts. Start investing today at ibkr.com.
It's now bulletproof Facebook. See, ever since it started embracing small business, the backbone of our country, it's setting up shops initiative. That was a brilliant move. Helping smaller business people, both in terms of making money, but also in terms of public relations. Watch or listen live on the CNBC app.
I'm Doug Hirsch. You may already know that GoodRx can help you save up to 80% on your prescriptions. Unfortunately, many Americans can't get to a doctor right now. The good news is that for many health issues, you can see a doctor online. It's easy. Just go to GoodRx.com, and with a few clicks, you'll be treated by a licensed medical professional, all from the comfort of your own home. Visits are confidential and affordable. Need a prescription? Your doctor can send it to your pharmacy or have it mailed to you. Get the healthcare you deserve at GoodRx.com.
Nutritious prepared meals made by chefs and ready in 3 minutes. We don't have to cook anymore.
We don't have to cook anymore? Go to Freshly.com today. You see ads for car insurance all the time, but how do you know which one is actually the best deal? That's why we created Gabby. Gabby is a free tool that's saving customers over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
Time now for our daily coronavirus tracker. Total U.S. cases have officially topped 6 million, but hotspots like Arizona and Florida are seeing significant improvement. Arizona recorded the smallest one-day increase in cases since mid-May, and its testing positivity rate does continue to decline. Florida also saw its smallest one-day increase in cases since June. And reopening plans continue, with New Jersey Governor Phil Murphy announcing today that indoor dining can reopen 25% capacity beginning this Friday. And on the vaccine front, FDA Chief Stephen Hahn telling the Financial Times yesterday that he was willing to consider granting approval to a COVID-19 before phase 3 trials end in order to make vaccines available as soon as possible. Still some questions about that, Wilfred. I mean, this was widely criticized by Russia when they did this as not living up to the safety standards. So we'll have to see. Obviously, though, we are in a crisis and a pandemic, and so it's a desperate time.
Absolutely. Some gap, we hope, still between the Russian practices and those, but absolutely got to stick to important standards. S&P, by the way, meanwhile, just negative as we stand. Time, though, for a CNBC News update with Sue Herrera. Hi, Sue.
Hello, Wilfred. Hello, everybody. Here's what's happening at this hour. In Greece, a huge wildfire is threatening one of that country's most important archaeological sites, the ancient citadel at Mycenae. Water-dropping planes have been helping firefighters try to contain that blaze. In Paris, temporary testing sites for COVID-19 have been set up to boost capacity as infections there rise. The 7-day average of new cases for all of France topped 5,100 today and set a new record for the 4th day in a row. Here at home, the White House Corona Task Force member, Dr. Deborah Birx, recommending the use of face coverings when visiting friends and family members.
We find that when people gather together in private as family members and neighbors, they make assumptions that there couldn't be anybody that has infection there. And then they don't wear their mask and they interact together. And that creates spreading of the virus among family members and among neighbors.
So wear that mask. You are up to date. I'll send it back to you, Sarah.
Sue, thank you. After the break, change is in the air. Delta just announcing it is eliminating change fees, matching a move by United earlier. We're going to talk exclusively with CEO Ed Bastian about that and a whole lot more. And we are just minutes away from Zoom Video's earnings report. We'll see if that work-from-home winner can keep the gains coming, up more than 400% year-to-date. Closing bell back in 2 minutes.
CNBC Sector Sort is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Is the salmon wild caught?
She only eats wild caught.
I need a price check on honey.
Don't get mad. Get E-Trade and get more than just trading. Investing, banking, guidance.
I'll keep working my way back to you, babe, with a burning love inside. Yeah, I'm working my way back to you, babe, and a happy place I die. Let it get away.
Service Now, the smarter way to workflow. So I'm brand new to all this.
I want to show that I'm interested, but not too needy.
How do I do less texting?
Can you make the first move? I mean, he's like really cute. I have 1,000 more questions.
Match experts have the answers. Start something great. Match.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Your house is your future. Protect it from unexpected expenses. Leaf Filter prevents damage to your home and keeps loved ones safe. Because at Leaf Filter, your safety is our priority. You're at home and see things that need work. But gutter cleaning is dangerous. With Leaf Filter, you don't have to climb a ladder to clean your gutters. Protect your home and your future. Call us at 833-LEAF-FILTER or visit getleaffilter.com for a free estimate.
Booyah! Welcome to Cray America. You can see more of me on Peacock, the new streaming service from NBC Universal. Go to News on Peacock to stream Mad Money clips and tips for free. That's a no-brainer. Learn more at peacocktv.com.
Going back, Delta announcing it's permanently eliminating change fees effective immediately. This following United's move to drop fees earlier. Joining us to discuss, Delta CEO Ed Bastian. Ed, a very good afternoon to you. Thanks so much for joining us. We particularly appreciate joining us again after those technical issues just a couple of weeks ago.
It's great to be with you, Wilford. Thank you.
So let's touch on that news that we just mentioned. I guess my question on it is not only are you facing weak demand, but are you also facing a bit of a price war, having to follow United's lead so quickly?
I wouldn't call it a price war. We announced late last year at our Investor Day that we were re-examining all of our customer policies with a particular eye on eliminating those that were seen by our customers as punitive. And I mentioned that also when I spoke at CES earlier this year. So this was a path we were on. I think it's the right move by United, and we're pleased to confirm that we're staying on the path and we'll be eliminating those. I have eliminated those since they're not in effect currently and won't be coming back into effect once we get outside this year.
Ever? They won't ever come back, Ed? I mean, how long is that promise once we're into 2021?
No, we're not. I'm sorry, to be clear, we are eliminating them. They're not in effect currently. And when the period of time that we had already previously announced they weren't going to come into effect, they're not coming back into effect next year. So they're effectively eliminated from this point forward.
Wanted to get your thoughts on the latest from Washington, Ed. White House Chief of Staff Mark Meadows said that they're looking at drafting an executive order that would prevent more airline layoffs or furloughs to get money to the airlines. What can you tell us about that? Have you had conversations about it with the White House?
Well, as you know, Sarah, the first CARES Act was really successful for the industry. It held all the jobs for our people, gave us time to get our bearings following the pandemic in the initial days of it. And as we're coming up on the end of the first CARES Act period, at September 30th, it'd be a great opportunity across not just the White House and the administration, across the Hill, to ensure that airline workers' jobs are protected for the next 6 months, and in turn continue with the payroll support assistance that they provided us the first extension. I don't know whether it's going to be in the form of an executive order or legislation, or if it happens at all, but certainly anything that is put in place to protect workers' jobs, I'm in support of.
Well, 30 days left, Ed, until that moment is reached. Are you planning for the worst? And if that does materialize, what does it mean for Delta? How many layoffs?
Well, we don't know if it's going to happen, so we have to assume it's not going to happen, and then if it does happen, we'll course correct. The only work group right now that we believe we would have furloughs in would be, unfortunately, our pilots. We're working with them, hoping to avoid them. There's a little less than 2,000 furlough notices that we've already had to send out to our pilots. Hopefully we'll be able to mitigate those through work we're doing with the union. If we can't and we don't get the extension, we'd be forced to go ahead with the furlough.
And Ed, what do you say to other industries that are not getting, bailouts and prioritization from Washington, like retail, for instance, which is a really important job creator and source of private jobs in this country, and can't access the capital markets either? Why can't you just go to the debt markets and raise money? They've been wide open ever since the Fed got involved, and prevent those layoffs.
Well, we are raising money. There's no question about that, Sarah, and we will continue to raise money. I don't think this is a bailout in any sense. This is a decision that's being made to keep employees in place in the face of a pandemic, a once-in-a-century experience. I can't govern whether the airline industry is more or less important than retail or any other industry. All I know is I can make the case for our industry, and the legislature and the administration will make the decisions as to which industry they decide to provide support for.
My other question, Ed, had to do with the experience of flying and what you're seeing, the fact that you have banned a lot of people from flying Delta because of the refusal to wear masks, the fact that you've left the middle seat open for a long time. These short-term sacrifices that have to be proven costly, especially against competitors, how do you think they will ultimately serve Delta in the long run, 5 to 10 years? What does that look like?
Well, we said at the start of the pandemic that we needed to restore confidence and protect the safety of our customers and our employees. So all the moves you mentioned, enforcing the mask policy, ensuring that the middle seat was open, electrostatically fogging every single plane before it takes off and wiping down the surfaces, ensuring that the HEPA filters are the highest quality air that anyone can breathe, better than the air that you and I are breathing as we speak together, are in place. That will ensure that customers have a continued confidence as they start to travel again. And from a Delta standpoint, I know it's going to continue to build brand loyalty. We see it in our Net Promoter Scores. Our Net Promoter Scores this summer are running in the 70s, which is an unheard of number for our industry that operates at scale, such as Delta, on a full service basis. And I know consumers are telling us repeatedly that they are thanking us for what we're doing. They're having confidence in travel and looking forward to getting back on a flight.
Ed, just wanted to talk about passenger traffic numbers. Clearly, the headline is that we're down still around about 70% year over year from last year's levels. But the subheading is we've just had 10 straight days of week-over-week declines as well, of about 5% each day from the same day the prior week. Are we heading back towards the lows of April? Are you getting worried about that trend of the last 10 days or so?
Not at all, Wilfred. You've got to remember that in August, there's a seasonal pattern. As we start to get towards the end of August, particularly in the southern part of the country, schools are back in session. People actually are starting to reduce the vacations and are working. So even though our numbers are reduced, we still see the same seasonality. The first half of August is always a heavier travel time than the second half of August. Once we get into September, post-Labor Day, hopefully we'll start to see a bit of business coming back. Business travel right now continues to be very limited. So, you know, even though the numbers are lower and at Delta, we're in that 25 to 30% of a normal pattern, we're starting to see a little bit of uptick. The one thing that's encouraging for me is the sales volume that we're seeing in terms of advanced bookings. Over the last few weeks, our sales numbers are starting to pick up again going into the fall. So it's a bit of an encouragement.
And then just to round off, I want to go back to the starting topic, because as we've been talking, American also just announced that they're going to suspend change fees. And I know you said this was in the works for a long time for you guys. There's definitely a feel like you and American have reacted to the United announcement, even if what you've done today is just make a big deal of something that was already in the works. There is a feel of price wars about trying to undercut each other at a time when the industry's already struggling.
Well, we are a competitive industry, there's no question about it, but I would label today's announcement at Delta as confirmation of the path we were on, since we'd already previously announced it. But we want to make certain that we're providing the greatest value and the best pricing opportunities to our customers, as I'm sure our competitors want to do the same.
Finally, Ed, just thinking about your comments about the confidence that we need to get back on planes and for business travel to resume, have you guys looked into antigen tests now that we're finally getting them approved on an emergency basis by the FDA, where you could quick test, or some of the saliva tests coming out? Is something like that realistic before we get a vaccine to happen, where people can do that before they get on the plane and feel more confident that people tested negative?
Well, we're doing that for all of our employees. So all 75,000 Delta employees are being tested for both the PCR and the antigen test, as well as the serology, to see whether they've had past exposure and carry antibodies. And we're using that to continue to test and retest people that are more vulnerable to it. I don't believe that there is enough supply yet in the market to start to move testing over to airlines. I still think there's parts of the country, particularly on the front lines of hospital workers and other places, where we need to make sure the supplies are adequate before you can move testing in. But there's a lot of innovation and development, as you mentioned, saliva testing and other forms of rapid testing that will be coming to market over the coming months. That will be another factor in bringing people back into air travel, particularly internationally.
Ed Bastian, thanks so much for joining us.
Great to be with you.
Up next, the final minutes of trading for the month of August, plus how female portfolio managers are beating the competition. And as well as that, we'll be discussing possible further stock splits. Who could be next? We're back in a couple minutes.
COVID-19 has launched the greatest behavioral change in our lifetime. We've vaulted 5 years in the adoption of digital in just 8 weeks. Now we're speaking to leaders who are asking, how do we bottle the stuff that worked?
We can innovate the distribution and consumption experience of financial services.
We've created a brand new processing plant by just making incremental improvements. Our people did it with AI, will, and enthusiasm.
We put everything we had into this.
Do not miss the chance to get in.
We had an opportunity. We took it.
My family is going to come in here and tackle you. Do this deal.
Shark Tank, tonight starting 7 Eastern, CNBC. Get yours.
My reputation was trashed online. I felt completely helpless. My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
This is a keepsake frame. This is actually a photo from my wedding. Keepsake is incredibly simple. You just choose a photo that you love. You can preview it in over 100 frames, and in a couple of days, you're going to receive your photo in a beautiful handmade frame.
PNC Bank believes that if you can check on Henry when you're miles from home, then your bank should help you check on your account to see what's free to spend. Virtual Wallet is so much more than a checking account. Easily see what's free to spend and put money aside for your next big purchase, like a trainer for Henry.
Stop it. Carl, do you have those figures?
Yeah.
Henry, sit.
It's Carl.
Virtual Wallet for digital banking from PNC. It's time to get more from your bank.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out. And you should be mad your smart fridge is unnecessarily complicated. Making ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading commission-free today.
The Market Zone is sponsored by E-Trade. Trade commission free today with no account minimums.
Welcome back with just under 12 minutes left in the trading day. We're now in the closing bell market zone. Commercial-free coverage of all of the action heading into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Bespoke's co-founder Paul Hickey with us as well. Good afternoon to you, Paul. Let's kick things off with the broader market. Last trading day of August and the NASDAQ on track for another record close. The S&P joining that as well, gaining 0.2% in just the last 5 minutes to take it into positive territory. Anything positive, of course, for either of those indices will be a record close. Mike, clearly fabulously strong August, whether the Dow declines today or not, and putting the rest of the world's performance for August, which has also been positive, to shame, well ahead of that. I guess the sort of turning point in the last couple of trading days, despite that positivity, is that volatility has picked up as well. And is that something, when you're at record highs, you should be concerned about?
It is something to certainly keep an eye on and maybe monitor for the idea that people are bracing for a little more turbulence out there. And it's interesting because today is a representation of a lot of the things that the skeptics have been complaining about this market. You know, you have the NASDAQ up, a very narrow strength. You have overall market breadth is quite weak. You do have the volatility index up, and you have the cult stocks, the FOMO YOLO group that are up a lot and are kind of carrying the NASDAQ. So whether it all comes into play into some kind of comeuppance for the market certainly remains to be seen. It has not so far.
FOMO, YOLO, and Momo, I would say.
Yes, exactly.
Paul Hickey, we're looking at new intraday record highs here on the S&P 500, capping off a banner month. What would you tell investors about whether it can continue?
You know, I think this kind of momentum that we've seen, it's, you know, people have heard on your show, on your network today, talking about Tesla, and like, if you want to get in front of that and try and short that stock ahead into this momentum, good luck. We've seen similar with NASDAQ 100. This year, it's had the highest winning percentage of up days in a year through August in the index's history going back to 1985. S&P 500, the Spider ETF, had more positive days this month as a percentage of total trading days than any other month in its history going back to the early 1990s. And what's really amazing about that is, to Mike's point, the themes of this month and are reinforcing the recent themes, is that more than half of all trading days this month have had negative breadth. So we have all these, you know, the divergences in performance, very strong at the index level. At the individual stock level, not quite as strong. So I think you do have some divergences, but it's not nearly as wide of a breadth divergence as we've seen during other periods ahead of major market turning points. So I don't think it's a major worry at this point by any means.
I think it's the market's posted gains in all but 4 trading days for the month of August. Unbelievable. Let's talk more about, you mentioned Tesla. Apple and Tesla are both hitting record highs today, both wrapping up their first day of trading after their stock splits took effect. Apple, which first announced its 4-for-1 split back on July 31st, is up 35% since then. Tesla's up more than 75% since it announced its 5-for-1 split on August 11th. Apple came out with better earnings so people were saying that had to do with it. You know, Paul, what has history showed us about the splitters and how long this can have a positive impact? People like analysts, Mike Santoli, everybody, it doesn't add value, but apparently it adds some momentum.
Yeah, I mean, Tesla, $188 billion in market cap since it's announced its stock split earlier in August. Apple's added $500 billion in market cap. Granted, like you said, Apple had a very strong earnings report to coincide with that. So there's other factors at work with Apple. But with Tesla, there's really not much news in that span besides the stock split. What you have seen historically is that you tend to see stocks that announce stock splits do well from the time the split is announced till the split takes effect. Once the split takes effect, you tend to see the outperformance wane. So if in the last 5 years, the 25 stocks in the S&P 500 that have split their stocks, once the split took effect, over the next 3, 6, and 12 months, the stock outperformed the S&P 500 less than half the time. So, I mean, we've seen outperformance by Apple and Tesla in spades over the last couple of weeks. History would suggest that you're not going to see that kind of outperformance going forward. But again, I mean, that's just the historical context here. And I mean, these stocks are just monsters on their own right now.
Do you think... Go ahead. Do you think it might spur more stock splits because these ones clearly, at least on the surface, appear successful?
Yeah, I mean, I think fundamentally a stock split means nothing. A CEO with a high share price right now is looking at Tesla or Apple and thinking to themselves, hey, why not split our stocks right now? It seems to be helping, and most CEOs are compensated according to stock performance. It's only an added incentive to increase splits. We have the average share price of S&P 500 stocks at a record high, and splits have been almost non-existent the last few years. So it wouldn't surprise us to see an uptick in the number of stock split announcements, since we have so many stocks at high triple digits and even 4-digit values or share prices right now.
Now, female-led funds have fared relatively better during the pandemic's wild market swings. According to new data from Goldman Sachs, the firm found that the average female-managed mutual fund has lagged its benchmark by 60 basis points so far in 2020, while funds without a female manager are down 160 basis points relative to benchmark. On a sector basis, female-managed funds tend to favor tech, and non-female-led funds favor financials. Goldman says female-led funds have higher exposure to Amazon, Apple, Microsoft, and Tesla, and relatively lower exposure to Berkshire Hathaway, Wells Fargo, Visa, United Health, and Exxon. And Mike Santoli, quite a stark difference there, a full 100 basis points in terms of performance relative to benchmark. I guess the other kind of standout point in this is that both sets are behind benchmark either way, which I mean, depends what the benchmark is, I guess, but also kind of interesting point to take away.
Yeah, when your sample is mutual funds, I mean, pretty much you're going to have that. A majority on average are going to be underperforming. And I was trying to pull this apart a little bit. It probably has something to do with the length of tenure. In other words, because female managers more likely have kind of grown as a portion of total managers in more recent years, chances are more growth managers, more interested in, I guess, more up-to-date kind of growth stocks. Also, maybe a little bit of a tilt toward ESG funds, which does also have that kind of tech focus. So a lot of those inputs probably at least having something to do with these findings.
I think women just do better during crisis moments. You've seen that with the studies around leadership as well, in which countries have crushed their virus curves faster, and a majority of them have female leaders. Paul Hickey does raise the question about whether growth will continue to perform, because that was the why here. A lot of them were in the right stocks for the right moment, and will that keep propelling this market?
Well, I think going back to this study, you also see when you look at studies of women CEOs and you study women traders versus male traders, the studies bear out that women CEOs have historically had better stock performance than men, and women traders have had better, better performance than male traders. And what's interesting is usually it's because women in these roles tend to be more risk averse, maybe not willing to take a huge leap or like a big risk. But with these stocks, we have Tesla, we have Amazon. I mean, some of these stocks a year ago weren't considered the most safest stocks, whereas the financials and stocks like Berkshire Hathaway, which are more represented by male managers, have underperformed. So it's a real interesting thing, and it hits close to home to me because I have 4 daughters, and I think they would be great in any of those roles.
More risk averse also, by the way, is often found to be less prone to overconfidence, and which is why female traders
you're saying it much better than I do.
Yeah.
I said 2 men with a lot of daughters in between them. Cloud monitoring company Datadog on track. Datadog, haven't talked about that one in a while. On track to snap a 4th month of gains after being one of the hottest stocks on Wall Street this year. Josh Lipton has the details. Josh.
So, Sarah, Datadog is set to finish August down about 12%. That does pause a very strong run here, but still, this stock has skyrocketed higher. It's up about 120% so far this year. In the past 5 months alone, doubling its market cap to $25 billion. Company offers a platform allowing customers to monitor the performance of their apps, networks, and computing infrastructure. But Datadog isn't immune to the macro either, saying earlier this month that economic uncertainty has had an impact. Still, analysts are bullish on this name, not a single sell on the street. Guys, back to you.
All right, Josh Lipton. Josh, thank you. Interesting one to point out. We've got less than 2 minutes left in the trading day. Mike Santoli, what are you seeing in the market internals?
Yeah, Sarah, as we mentioned earlier, on the weak side, if you look at market breadth, especially in the New York Stock Exchange, it was more than 2 to 1 to the downside, and it remains that way. So clearly there's, as I said, an undertow of selling despite the flattish indexes. Take a look at the equal-weighted NASDAQ 100 fund against the regular QQQ, and you see almost a percentage point of outperformance by the market cap weighted one. So the average stock is badly lagging across the board. Take a look again at the VIX volatility index, really ticking up here. It's above 25, up to 26. Look, the secret is out that September is a weak month, and traders have a lot of gains, and it seems like hedging through the indexes is offsetting some of the very highly speculative action in individual equity options.
We've got just under 1 minute left of the session. The S&P just positive, or at least hovering in and around being in the green and the red, and it did touch a record intraday high about 10 minutes ago. But as we're settling here, it's just 5 basis points into the negative, not quite a record close for the S&P as we stand. We will have a record close for the NASDAQ composite, which is up 0.85%. The Dow is down 0.6%, but of course a very strong August for all 3 of those indices. The NASDAQ up nearly 10%, the S&P and the Dow up over 7% each. As for today, tech, consumer discretionary lead the charge, along with healthcare, while energy and materials are at the bottom of the pile. At the close, the S&P 500 is just negative, just missing out on another record close. The NASDAQ composite, another record high.
Just missing out on the record close, but still chalking up a gain of 7.4% for the month of August. And that's a wrap. Welcome back, everyone, to Closing Bell. I'm Sarah Eisen here with Wilfred Frost and Mike Santoli, our CNBC senior markets commentator. Take a look at how the markets finished up the trading month of August and the day today. The Dow closed lower, 230 points. Got some selling there from names like Disney, JP Morgan. The financials did not have the best day. Though Apple remained higher, it had split, though, so now it's less than 3% of the overall Dow. It was much higher than that before. S&P 500 closed lower by about 0.25% ultimately. You had groups like energy, materials, financials, and industrials weighing on the overall market, though technology did better. Tech, healthcare, utilities, and consumer discretionary all closed positive. It's why the NASDAQ closed at a new record high, 0.68%, leaving the NASDAQ up almost 10% for the month of August. This continues to be a tech-fueled market, even though we have seen some signs that some of those value or cyclical stocks have outperformed lately. Still continues to be all about technology. Russell 2000 quickly ended down 1%, breaking a two-day win streak. For the month, the Russell is up 5.6%, so it is lagging the overall markets, but still managed to have a good month as well. We're closing out the best month for the Dow and the S&P in decades. Coming up, we're going to ask Allianz Chief Economic Advisor Mohamed El-Erian whether he's worried about stocks getting overheated at these high levels. Joining us first, though, to talk about the market today, Paul Hickey is still here, co-founder of Bespoke Investment Group. With us is Robert Noble, CIO at Synovus. He's going to join the conversation. Welcome to you. But first, Mike, we'll turn it over to you on the strength we've seen, the fact that growth outperformed again, capping out the story, really, of the month, which was tech. It was the NASDAQ, and that brought stocks to record after record.
Yeah, for sure, Sarah. And really, this moment is one where you have to decide, is reversion to the mean going to be a factor here? Because if it is, it's going to be a little bit of a drag. You have 5 weeks up in a row. You have both July and August gains of 5% or more in each month. That's extremely rare to have that kind of strength throughout the heart of the summer. All these other factors we've been talking about that has the market a little bit stretched above its longer-term trend. Now, that hasn't really mattered. These very strong phases of uptrends tend to mean good things going out a little bit, but there is a give-back phase often. As I said before, though, the secret is out that September tends to be a little bit choppy and weak, especially in election years. We'll see if that kind of gets discounted up front, or maybe the market can show its strength through it the way it did through what's supposed to be a weak August. Still, though, breathtaking speculative activity in the big names of the NASDAQ. Apple, Tesla, and Amazon today accounted for more than 100% of the gains in the NASDAQ 100. And Tesla in particular traded $55 billion worth of shares today, twice as much as Apple traded today, even though Apple is 4 to 5 times as large as Tesla.
Robert, do you feel like the disconnect between the winners and losers can continue?
Well, I would tell you, we've enjoyed seeing the market run this month, and it's been a great place. And we feel like the market's in a good spot at this time. We're comfortable where it is. The disconnect will probably continue because what we're seeing thus far is that the economy, the market investors are rewarding companies that have low debt and they have superior amounts of cash and cash flows, and they're also competitively advantaged. You know, these are the place where the winners are, and they will continue to be the winners up until the rest of this year and into 2021.
Paul, the fact that bond yields did rise on the month, that was a bit of a reversal. The fact that we saw really some strong action in groups like transports, which are very cyclically sensitive, I think ending the month up 12%. What does that tell you? The market sniffing out a new kind of recovery, a new cycle here for the economy?
Well, I mean, if you look at economic data, we track about 40 different economic indicators and track their year-over-year changes, the momentum on a month-to-month basis. For the month of July, which is the most recent month where we have full data, the percentage of indicators showing positive momentum was as high as it was in only one other month, and that was coming out of the 2009 financial crisis. So we're seeing strong momentum in economic indicators, obviously off a very low base. But I think we may have just seen the shortest recession in U.S. history. And add to that, we've had so much stimulus thrown at the economy that when we do start seeing lower numbers in the COVID outbreak, I think that's going to, and we're already starting to see that in this performance of the transports and the industrials, which are starting to do better. And I think over time, those stocks should do a little better, whereas the tech may take a breather. You take the semis. We saw last week, we saw the S&P hit a record high on the same day that the semis relative strength hit a 1-month low. That's happened 6 other times since 2013. At least 2/3 of the time over the next week, 1 month, and 3 months, the S&P 500 saw weaker than average returns going forward. So it begs that idea of underperformance or subpar returns for the market in the short term, especially after we're so far ahead of our moving averages and we've gotten extended at these levels.
Mike, I was interested by the intraday action in the dollar. Started strong, ended weak. Is that perhaps suggestive that there's still more room to price in how dovish the Fed can get, particularly with the latest set of announcements that they're willing to kind of embrace inflation?
You know, it could be. Well, for me, you had this very weak bounce in the dollar in general, and it seems like it's difficult to fight that trend. You did see kind of real yields, again, make another new low today as nominal yields came back a little bit. So that trend has been tough to get in the way of. I don't know really if we're pricing in incremental Fed easing from here, or just it's sinking in exactly how committed the Fed is to sort of staying easy deep into when unemployment comes down a lot.
We've got some breaking news coming out of Washington. Kayla Tausche has it for us. Hi, Kayla.
Hey, Wilfred, a congressional oversight panel has opened an investigation into all federal contracts negotiated by the White House trade advisor Peter Navarro as the government abruptly cancels a remainder of the $646 million contract it negotiated with Royal Philips to make a remaining 33,000 respirators. The House Oversight Subcommittee on Consumer and Economic Policy's chairman, Raj Krishnamurthy, told CNBC.com's Will Fewer that this investigation comes after the abrupt cancellation of that contract. So far, Royal Philips has only made about 12,000 ventilators out of a total 45,300 ventilators that was entailed in this contract. To be sure, the Department of Health and Human Services a couple weeks ago told the Washington Post that of the 95,000 plus ventilators currently in the federal stockpile, only 15,000 of those vents had been sent out to hospitals. So there does seem to be a glut of ventilators in the stockpile, but once there is a signed contract, it is assumed that the government would be paying out the remainder of the contract, and now Democrats in the House are trying to investigate why this one in particular was abruptly canceled and whether there are risks embedded in other contracts that were negotiated by Navarro. We'll be reaching out to Navarro in the White House as well for comment. We'll get back to you as soon as we have that.
Okay, Kate, interesting one to keep an eye on. Thanks so much for bringing us that. Pivoting back to the markets, Robert, we mentioned the word inflation in the last set of comments, and clearly the Fed is certainly warming up to the idea. If inflation arrives, where do you want to be positioned? Stocks still the best place to be?
Well, at first, it's going to be hard to see a rise in inflation with, as we recover from this recession. We have 10% unemployment and we have excess production capacity. So as the economy recovers and production capacity gets filled and the job numbers start to grind lower, we have made a shift. We have considered having investments in both styles, growth and value. Growth has led most of this way because there's been increased usage of healthcare and technology. But we see this growth that's been pulled forward a year or two that's helping the growth companies not lasting forever. And so, as the growth starts to moderate, we think value is where you may want to consider having some funds. But, value from a performance leadership standpoint needs to have a catalyst. We could see value doing better on a relative basis, primarily through financials and energy. But our focus on the value side would be companies with dividends, consistent dividends, steadily growing dividends. On the financial side, we would think that if the worst case scenario for the loan loss reserves does not come to pass, investors will bid those up and the price would go higher. Energy would be more of a long-term story. And I would encourage, or I would think active management would be the best use to separate out the competitively advantaged companies.
A lot of active managers and value investors have been saying that. We're going to continue the conversation in just a moment. Let's get to Zoom earnings. They are out. The stock is up. Deirdre Bosa has the numbers. Deirdre.
Sarah, if you thought that its first quarter was a blowout, wait till you hear its second quarter just reporting, blowing expectations out of the water, even the highest expectations on the street. EPS coming in at 92 cents a share, double what the street was expecting of 45 cents. Revenue up 355% year over year growth, coming in at $664 million. Its guidance also extremely strong. Q3 earnings per share guidance between 73 and 74 cents. The street was expecting, get this, 35 cents. Q3 revenue guidance in the $685 to $690 million range, higher than all the estimates on the street as well. The estimate was $493 million. Fiscal full year revenue and full year EPS also coming in much higher than the street was expecting. Also, a few other stats for you guys. The number of customers contributing more than 100,000 in revenue. So those are Zoom's biggest customers, up 112% year over year. So more than doubling, guys. This is another blowout quarter. Shares are up, I say just less than 4.5%. Because this stock, you might expect it to be up higher, but remember that since its last results, shares are up more than 80%. Back over to you.
Yeah, it was a blowout. Deirdre, thank you. Mike, not seeing a lot of companies posting 355% revenue growth. By the way, don't miss it. We've got a first on CNBC interview with Zoom's CFO tomorrow, 8:30 a.m. on Squawk Box. She'll be there to discuss the numbers. But that revenue growth, how about the customer growth? 458% from last year. Unbelievable.
Yeah, it's all stunning, and it essentially it just accelerates this company so many years down the road versus what people thought they could be 6 months ago. I think the market now is assuming almost that they become the next sort of ubiquitous platform, this indispensable thing we can't get out of our lives even if we want to, and then can layer in more services and revenue on top of it. But just to underscore what Deirdre said there, 6% pop on this amazing number shows you that maybe there's got to be some digestion here just because this stock has been just vertical lately.